It's quiet. For now, at least, 420 on a US 10-year, and in foreign exchange, the euro just a little weaker here at 108.79. Coming up on the programme, we'll catch up with Bloomberg's Guy Johnson on the latest as tech outages lead to global disruptions. Anne-Marie, as the former President Donald Trump addresses the RNC, and we'll speak to RBC's Amy Wu Silverman on two big volatility events on the horizon. We begin with our top story, a widespread global computer outage hitting businesses worldwide. Here's the latest, a series of technical glitches linked to Microsoft and CrowdStrike grounding airlines, hitting banks and closing restaurants around the world. Microsoft saying they are aware of an issue with their Azure service and a resolution is, quote, forthcoming. Bloomberg's Guy Johnson joins us now with the latest. Guy, I think we all woke up to this. What are you seeing on your side?
Started in Asia, John. It's worked its way through Europe, and it's now starting to affect the United States. We saw US carriers issuing ground stops a little bit earlier on. I think American has now lifted its, but nevertheless, you are going to see significant disruption in the airline sector today, potentially into the weekend as well. But as I say, it started in Asia. I've never seen a global story develop in this way. We've seen limited and regional issues with IT, with airlines, with other sectors, and now we get one that is connected. And that speaks maybe as well to lessons learned that we got out of the pandemic, John. We learned how interconnected the world's supply chains are. We're now learning how interconnected the global IT system is. That CrowdStrike update having a significant effect. We don't yet know how long it is going to last. But in the airline sector, at least, the effect of this, with aircraft out of position, with crews out of position, with passengers backing up, and that's what we're seeing at airports globally, it could take a number of days to fix this issue.
Guy, I'm sure a lot of people traveling just simply want to know, can planes get into the air this morning? Is there, I understand the backup and that sort of thing, but can they actually get flying? Is there any hope for anyone trying to travel this weekend?
So it's not, Danny, it's not an issue with the aeroplanes per se. It's an issue with everything that goes around them. It's check-in, and we're hearing some airlines and some airports having to do check-in manually. Yes, they are sharpening their pencils at some airports to try and make this happen. It's payment systems. Traditionally, airlines have been very slow to update their IT systems. It's incredibly complicated, but some of the systems have been migrated to the cloud. And the problem is that with some of it out, everything grinds to a halt, and that's the problem here. It could just be a payment system, it could just be a check-in system, it may have nothing to do with the aircraft. We did see Delta and United, for instance, issuing ground stops earlier. This is about aircraft that are on the ground and the communication they have with the rest of the airport system and the ATC system, which is why that happened before. That happened. Now, we've seen something like that happen before, but never on this kind of scale globally. So the problem is, though, that different airlines, different airports are being affected in different ways. There isn't a kind of clean read on exactly what is happening here, and that speaks to the idea that airlines have been kind of piecemeal upgrading this system and then that system, taking that bit onto the cloud and leaving that system behind. And that's, I think, the problem we're experiencing this morning.
Guy, I just want to tap into a word you used, manually, and then you talked about sharpening pencils. Can you just walk us through what that looks like? Are we seriously talking about certain airlines writing out boarding passes this morning?
Well, if you can't check passengers in, and that is the system that is causing problems, then maybe that's what we ultimately come to. I suspect, John, it's probably a little bit more complicated than that. We all know these days that when you fly, you have to fill in various forms, and the system needs to know who you are and where you're going and what your ID looks like. So I suspect it probably is a little bit more complicated than that. But yeah, I think certain airlines will be reverting back to much more manual systems when you check in. The problem with that is it takes so much longer. We're all getting used to showing up at the airport and having a lot of this process automated. A lot of the airlines have been trying to take us in that direction. There's also bags to factor into the thinking as well. But yes, I think the process is going to be more manual today and therefore potentially a lot slower.
Guy, you've been covering this throughout the morning in London. Have you got a decent sense of whether this was Microsoft, whether it's CrowdStrike? I got a sense this morning that it was both. In the last 5-10 minutes, it looks like it's CrowdStrike.
It feels like this was a security update gone wrong, John. The problem with cybersecurity is that it needs to sit everywhere within the system. It's not just something that sits at a level within the service. It has to go into everything. Therefore, it is much more embedded into everything because it has to see everything. The security system has to see pretty much everything, and that appears to have been the problems here. But it's affected different systems in different ways, and I think that is where the challenge really lies, and how quickly they can kind of reverse engineer the process, take out what they were putting in and put back what was there previously. I don't know. It feels like it could take quite a while.
Guy, we're going to catch up with you in the next hour, I hope. Guy Johnson there, out of London on the latest with the airline business. Much more still to come from the team here at Bloomberg. Going to promise you updates about every 5-10 minutes or so on this programme this morning until ultimately this is resolved. The latest from CrowdStrike in the last literally 10-15 minutes, Danny. This quote here, a statement from the CEO, actively working with customers impacted by a defect found in a single content update for Windows Host. This is not a security incident or cyber attack. I think that's a really important line in this statement. The issue has been identified, isolated, and a fix has been deployed.
Cyber attack or not, it just does show a vulnerability. It wasn't that long ago that Powell was in Sintra saying that cyber risks were the #1 thing keeping him up at night. But to the point of things being done manually, again, I'm just really struck by the breadth of this. Apparently, Norges Bank is having to do liquidity auctions by email and telephone this morning. It's everybody going back to basics.
We're used to local outages in specific regions, in certain industries. I don't think we've seen much of this before, where it's global, around the world, and across industries, from airlines to restaurants to payment systems.
To the point where you have people at JP Morgan waking up and trying to log on and not being able to do it. But that's the thing, it's really simple stuff, right? It's not, to Guy's point, it's not that planes can't get onto the air, it's that people literally can't log on. And that's enough to disrupt business globally at this point.
If I was catching a plane, I'd be frustrated. I imagine a lot of people watching this program are, sure. If I was logging into my company's system and couldn't get in,
you get an early weekend.
I think I'd be okay with that one. Let's see how that one works out. As I say, much more updates through the morning right here on Bloomberg TV. We need to turn to our next story. Two campaigns heading in two very different directions.
If I had not moved my head at that very last instant, the assassin's bullet would have perfectly hit its mark, and I would not be here tonight. 4 months from now, we will have an incredible victory, and we will begin the 4 greatest years in the history of our country. I will end the electric vehicle mandate on day 1, thereby saving the U.S. auto industry from complete obliteration. That means 2 things on day 1, right? Drill, baby, drill, and close our borders. So I better finish strong. Otherwise, we'll blow it, and we can't let that happen.
Donald Trump formally accepting the Republican nomination, his grip on the GOP appearing tighter than ever, just as President Biden's campaign hits a new low. The Washington Post reporting former President Barack Obama believes Biden's path to victory has greatly diminished. Anne-Marie joins us now from the RNC in Milwaukee. You were in the room, Anne-Marie. What was the big takeaway for you?
Well, Jonathan, just the split screen is astonishing between President Trump versus President Biden. President Biden isolated, more calls growing for him to step aside. While President Trump, it was so clear last night in that room that he has the absolute control on this Republican Party. Now, it was a more than 90-minute speech, and a lot of the times there was moments where he really veered off script and went into some of the more similar rhetoric that we're used to from former President Donald Trump, and at times being very dark when he was talking about some policy, especially when it came to immigration. But the start of the speech, that emotion he brought to the floor, you could hear a pin drop. He was talking about the fact that if another world, if his head was a milli-inch in a different direction, he would not be here to tell that story. He said God was on his side, and he said he's never going to recount this story again because it is too painful. And there was tears in some of these individuals' eyes that see him almost as a god. So this was the emotional part of the speech. A lot of this, I imagine, is going to get sliced and diced on TikTok, on Instagram, and this is the appeal he's going to have to American people, because as he's recounting this story of this attempted assassination on his life, he's also talking about the fact that he wants unity. There's too much division in America. So he's calling for unity and the fact that he wants to be a president for all of America, not half America. He says, what's the victory in winning just half of America? But then as the speech went on, more than 90 minutes long, we heard a lot of the same things from Donald Trump. 2 things were clear, though. He wanted to tap into the concerns Republican voters are seeing, and a lot of voters are seeing, quite frankly, across the board, and that's immigration. He was talking about there how it's an invasion of aliens at the border. In a little bit more of a darker language, he was talking about how this has meant misery and crime on the streets of America, but also the economy. And he was trying to tap into the high prices of groceries and energy. And when he said drill, baby, drill, members on that floor got up and started chanting with him as well. So it was an arc of a speech, one of emotion, and then really at the end, ending with a lot of energy.
Anne-Marie, appreciate the update. We'll touch base with you again in about 60 minutes' time. AMH there from Milwaukee, Wisconsin. With us around the table through the hour, I'm pleased to say it's Stuart Kaiser of Citi. Stuart, good morning to you. Let's take a step back because we've got a lot to cover. Let's start with markets so far this week. How much of what we've seen over the last 1-2 weeks is down to the so-called Trump trade?
I think some of it, I would credit much more of the rally to the payrolls report and the CPI data more so than Trump. Obviously, the Trump odds have been favorable. I was just actually, marketing in Europe and the Middle East. I think there's very high conviction that Trump is going to win the election over there. I think probably higher than what we see in the U.S. Some of the popular Trump trades, though, banks being one, yield curve steepeners being another, I think are trades that people want to have on anyway. And perhaps the polling is getting them in a little earlier or giving them a little higher conviction in it. But I don't know that it's necessarily a positioning that they would be averse to, regardless of what's going on in the election.
So it's using it maybe as a bit of an excuse. But how much of it is also just down to positioning itself, down to how short we were small caps and how over our skis we got on the big high-flying tech?
Yeah, I think that's right, Danny. If you look, what's happening the last week or so is sort of a microcosm of what happened late last year, which is you have solid economic growth, you have inflation surprising to the downside, and you have the market getting ready for the Fed to signal cuts. It's a little bit lower volume right now than it was late last year, but the recipe is the same. And frankly, if you go back to the June FOMC and CPI data, which were on the same day, the first 3 hours of that trading day, you saw a very similar trade. Regional banks rallying, small cap rallying. So this is the soft landing trade, and we're in a soft landing trade. To your point, it does pressure positioning, which gives it just a little bit extra juice. So
if I'm going into the weekend, I'm thinking of two things. One, let's hope this tech outage disappears by the time I get to Saturday, and we don't have to worry about this anymore. The second one is what's going to happen with the sitting president. We've had report after report in the last 24 hours. I just love a market perspective. If we get that announcement over the weekend that President Biden is stepping aside and he's not going to be in the race to get a second term, what do you think markets look like Monday morning? What's vulnerable given the run-up we've seen?
Yeah, it's a great question. I mean, we obviously had very big political news over the last weekend, and I think the market probably opened a little more stable than we would have expected. I think you would assume that the market will think if the Democrats were to change their candidate, that would get the odds a little bit tighter than they're being priced. We're still of the view that the election is very close to a 50-50 call, probably right up until Election Day. So I think if you were to get some news like that over the weekend, it would probably start to push the market in that direction. And our thinking, because he looks skeptical, is that this is a very small number of states. It's a very small vote differential in those states. And technically, we don't know both candidates yet. So I think to get too far in either direction is probably irresponsible.
I'm not actually that skeptical personally. It's just the contrast that you draw between what people think abroad as they look into the United States and the conviction they have that Donald Trump's getting a second term and how we feel about it here in the United States. What do you think explains that?
You miss the forest for the trees, maybe. I think when you're in it, maybe you can't appreciate it as much. And I also think, I think there's a lot of international investors that probably maybe don't understand the exact details of the Electoral College and how all that works anyway. They're seeing the national polling as such a wide differential and maybe not as focused on those kind of battleground states that are just going to really decide the election, right?
Stuart's going to sit with us through the hour. Stuart Kaiser sticking with us through the next 60 minutes or so. With equity futures on the S&P 500 totally unchanged. I promised you an update on that global tech outage. Let's get straight to it right now with your Bloomberg Brief. Here's Yahara Haquez. Hey, Yahara.
Hi, John. Companies around the world facing tech outages this morning. The issues plaguing firms including banks, broadcasters, and airlines. As for what's behind it, CrowdStrike has come out and said that one of its products caused Microsoft's Windows operating system to crash. The CEO saying on X, this is not a security incident or cyber attack. Meanwhile, Microsoft also warning that its 365 apps and services may continue to run in a degraded state. An earnings beat from Netflix beating analyst expectations across all regions, adding 8 million new subscribers in the second quarter. The results were nearly double the average expert estimate. However, the forecast for the third quarter coming in slightly weaker than expected. Shows like Bridgerton and The Roast of Tom Brady have helped the streaming giant hold on to 278 million subscribers worldwide. And Donald Trump taking on President Biden's electric vehicle policies in his nomination acceptance speech last night at the Republican National Convention. Trump vowing to end on day one Biden's plan to have 50% of all new vehicles sold by 2030 be electric, saying he would save the auto industry. Trump saying he would instead direct the money to projects like roads, bridges, and dams, though it wasn't immediately clear how he would make good on the pledge. That's your Bloomberg Brief. John?
Yahara, thank you. The tension around that last one, ending the EV mandate at a time when Elon Musk is helping to fund the campaign.
Right.
Work that one out.
Right. Well, also Elon Musk cozying up with China at a time that Trump is also using and the VP, we should say, is using very strong rhetoric against China. I think there are quite a few contradictions we could pick apart.
Just these points of tension all around the world right now that we need to explore. We'll come back to that. Equities right now just about unchanged on the S&P. Up next on the program, global aviation grinding to a halt.
If it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down.
That conversation up next, the latest on a worldwide computer outage just around the corner from New York City this morning. Good morning. Live from New York City this morning. Welcome to the program. Equity futures on the S&P just about positive as we close out the trading week. Under surveillance this morning, global aviation grinding to a halt.
If it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down because suddenly there'll be hesitation around onboarding reliance on these cloud systems. It reinforces and exacerbates systemic risk and concentration risk. And I think that topic will emerge more and more in the future.
So here's the latest. Widespread outages disrupting the airlines. United, Delta, American and Spirit all grounding flights due to communication issues. The latest from CrowdStrike reads as follows, a statement from the CEO. We're actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. To weigh in on what's happening in the airline industry, Benedict Camel joins us now for more. Benny, great to catch up with you, sir. Just walk us through what's happened and how some of these companies are dealing with it.
Hi. Yeah, so a bloodbath, really, that we're experiencing. A lot of the disruption has sort of cascaded from Asia over to Europe and to the US. You mentioned some of the US airlines. They have this. They're on the ground. Doesn't mean that the aircraft couldn't fly, but this is an industry that's very cautious, that wants to take these extra precautions. So whenever there is a disruption, there is the directive to go slow. That's what we're seeing right now. We have about 1,400 flights globally that are disrupted at the moment, that are cancelled in some cases. Give you a sense, we're expecting about 110,000 movements today. So it might not seem like a huge amount, but this is something that ripples through the industry and will take days to fix. We just heard that they think they've fixed the actual technical issue on the cyber side, but for this industry, it'll mean a lot of aircraft will be out of position. It will mean a lot of planes will be, they'll need to put them somewhere else, and that'll take days to fix.
And we've already seen the images, Benny, of people in airports lining up, waiting for things to get done because simple issues like airlines having a hard time logging into their systems. Do they have the talent, the staff even, in a post-COVID world to help clean some of this up once the IT issues are resolved?
I mean, in one word, no. And that's obviously been an issue ever since COVID, that we have too few people on the ground. The ground staff are very thinly spread. And this is, at times like these, this becomes very noticeable. It's also a sort of worst case scenario in terms of timing. Today was supposed to be the busiest day of travel in the UK, for example. School holidays are upon us. A lot of people are heading out. So what was supposed to be a really frantic and busy travel day has turned into something really chaotic. Berlin, for instance, closed down. Amsterdam, pretty heavy disruptions there. These are big airports, and a lot of these aircraft that won't be able to land there, we've seen some of them turn back. That's going to, as I said, take days to fix because all these aircraft will be out of position.
Great. Hey, Benny, just one question from an investment perspective. I mean, should I treat this any differently than, let's say, weather disruption around a Thanksgiving weekend, assuming it gets resolved in a reasonable amount of time? Or is this just kind of, your typical airline disruption? We move on once the backlog clears?
Well, I mean, it's atypical in the sense of the size and the scale. And I think one word that a lot of people have used, and you'll hear in the next couple of days, is sort of unprecedented. What it will raise is the issue of, are we facing an industry here that is underinvested? You know, do we have creaky technology? And the answer in some cases is definitely yes. It's kind of interesting to see that you've got a lot of these issues over here in Europe, some of them in the US. For instance, in the Middle East, the Emirates of this world, the Qatars of this world, they appear to be unaffected. So that's going to raise some questions as to, is this an event that is more isolated to, shall we say, legacy carriers dealing with legacy products and really haven't invested as heavily? So that's going to be something that will be quite heavily scrutinized going forward.
Benedict, do you think it's just fair to say that this was one small issue with one firm, but it just so happens that it's one firm we all rely on? Isn't that ultimately the issue here, that we all run the same program, we all rely on the same company?
Well, that is indeed that will be the other big question that will come up. Like, are we spread too thin? Are we all too reliant on one product? And if something goes wrong there, then suddenly everyone really suffers. And should there be more redundancy built into the system? I mean, the aviation industry, like few others, has redundancies built in. You know, every aircraft has multiple redundancies built into its systems, and it's an industry built on safety. For something like this to happen is really unprecedented, and it will raise exactly that questions. What is our backup? What are our redundancies? Why didn't we have them? What kind of spending are we looking at? Those will be tough questions, but a lot of this has to also do with taxpayers' money. You know, the FAA and other regulators, they don't have bottomless sort of amounts of money to spend. So again, that'll be very difficult to sort of pass in the next couple of months and beyond.
One of the very best, Benedict Camo of Bloomberg. Benny, it's great to catch up, sir. Appreciate your time. Aviation around the world just grinding to a halt. Responsible for it, CrowdStrike in some ways, and this is what they say: the issue has been identified, isolated, and a fix has been deployed. Danny, I think you asked the perfect question. Even if the issue has been identified, isolated, and the fix has been deployed, for the airline industry, the planes are in the wrong place, the staff are in the wrong place. This can take a long time to mop up.
Move planes. You need to get through people who have been waiting in lines, and you just don't have the staff in place anymore. So this is why, sure, it's an impact today, but it's going to stretch probably for a couple of days.
Into the weekend, most likely. More updates still to come on that. Coming up on this programme, Netflix shares falling after its forecast falls short of estimates. We'll catch up with Geetha Raghunathan of Bloomberg Intelligence in just a moment. From New York, this is Bloomberg. OK, we've got a lot to work through, so let's start with the price action. Equity futures on the S&P 500 just about positive. We're down on the week on the S&P, steep two-day decline on the benchmark here in America. We're poised for the worst week since April. The Russell just about unchanged, the Nasdaq going nowhere. In the bond market, 2s, 10s and 30s. Yesterday was a curious one because jobless claims came in and moving in the wrong direction. They were higher. And Danny, then yields started to creep out at the front end too, which I couldn't really make sense of.
I have to say, I think just yesterday in general was a really weird day. A really good stat from Cameron Kreis. Basically, we've never had before where you get the market hit an all-time high and then fall more than 1% 2 days in a row. So I think it's just, you know, a little bit of weirdness and panic in this market.
A little bit unchanged, going nowhere in the bond market. Let's get you a sense of things in foreign exchange. We'll look at the euro. The euro against the US dollar at the moment, just south of 109, 108.85. We're negative on that currency pair by about 1/10%. Plenty of top stories for you, so let's get straight to it. Under surveillance this morning, a global tech outage hitting businesses worldwide. A series of technical glitches linked to Microsoft and CrowdStrike systems impacting major airlines, banks, restaurants, and a whole lot more. Got a series of statements here to share with you, so let's start with CrowdStrike. One of the companies that a lot of people are blaming for the outage this morning. That's down about 16% in the pre-market. Here's the statement from that company. The company's actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. Now, this is hitting different industries in different ways, and within those industries, hitting those companies in different ways as well. So take Air France. They say their operations are mostly back to normal, given this issue. As we understand it from them, flights to Amsterdam and Berlin are disrupted. Other flights have departed. and arrived normally. The latest from United, I think this is an important update on the US side of things, Danny, for anyone waking up this morning, working out whether the flights are going in and out of airports this morning from United Airlines. This is what they have to say. A third-party software outage impacted computer systems worldwide, including at United. We are resuming some flights, but expect scheduled disruptions to continue throughout Friday. I imagine we're going to hear from a series of airlines throughout today on this issue.
Yeah, Delta being one of them. They've paused their global flight schedule. They're also going to issue a waiver like United is doing too. And to your point, it's not just airlines. The DC Metro also this morning, for anyone waking up hoping to take that to work, apparently they're still operating, but they are facing delays. And again, it is a breath, and it all stems from what we understand just from one company. We're in this world where everyone wants to say that they're tech-enabled. Everyone wants to get their hands on NVIDIA chips. It's a concentrated market. And I think this really raises a risk. As more companies move that way, how vulnerable are we?
We're becoming reliant on one company, seemingly, for one big issue. And in this case, it's CrowdStrike. CrowdStrike's down about 15% in the pre-market. We'll keep an eye on that. Got to keep an eye on this as well. Former President Donald Trump cementing his hold on the Republican Party in a speech formally accepting the nomination to run for a second term. President Joe Biden facing growing pressure from his own party to step out of the race. The Washington Post reporting former Speaker of the House Nancy Pelosi is telling Democrats Biden may soon be persuaded to step aside. You heard the comments, Stuart Kaiser, from the former president yesterday evening. Drill, baby, drill. I think it's really important to go over how energy did under his first term and how energy's done under President Biden. Typically, it doesn't really matter what they've got to say on the issue over the last two terms, because he was talking about drill, baby, drill in his first term and energy didn't do well. President Biden wants to move away from fossil fuels. Energy's ripped. How important are those comments from the market perspective?
I mean, I think they matter. It's funny, if you look at U.S. oil production, it's like 13 million barrels a day. It's as high as it's ever been, and that's been under a Democratic White House. You know, we've kind of said around the election you have three sectors that are in play, you know, banks, healthcare, and energy. You know, healthcare and energy both, I think, have some puts and takes. Yeah, you want to drill, but drilling puts downward pressure on oil prices themselves. So if you're investing in that sector, you kind of need to pick where in the sort of energy stream you want to be. You might actually want to be in more of the services and drilling area as opposed to like exploration and production, which is much more sensitive to the headline price of oil.
Interesting. What do you make of the call on banks? This is what we heard just yesterday. Chris Harvey, Wells Fargo, upgrade banks to outperform. This is what we heard from Citi at the start of the week. Your colleague, Stuart Cronut. Overweight US banks is our preferred Trump trade. That's from Scott Cronut. Stuart, what do you make of these calls to overweight banks? It's becoming quite consensus off the back of the political developments.
Yeah, and I think, as I mentioned earlier, banks is something people are comfortable being long anyway, just given on the outlook for rates and the FOMC. The valuation's a little lower. Maybe you get some deregulatory. You also got some positive news on the Basel side. Maybe those rules being rolled back a little bit. So I think it's a sector people kind of want to be long a bit as well. From an election perspective, it does feel much cleaner than energy and healthcare. So I think that's why people are using it. So banks and corporate tax rates, I think, are the cleanest ways to trade the election right now.
Should we hear any sort of news, and markets already sort of leaning this way, that Biden does drop out, how difficult is it going to be for this market to process a new presidential candidate and the policy implications that might come with it?
Yeah, you know, it'll depend who they go with, if that's the eventuality, right? You know, if they go with Vice President Harris, you probably assume some policy continuity, and it can be a, steady as she goes type thing. The question would be, a lot of people have proposed, no, this should be a competitive process. Well, a competitive process introduces a lot more uncertainty, and I think you will get election risk premiums kind of bleeding into the system if that happens.
We'll come back to that topic in just a moment. I want to turn to Netflix. Hardly talked about it this morning. It's down in the pre-market by about 1 full percentage point. The streaming giant adding more than 8 million customers in the second quarter, but forecasting third quarter revenue that fell short of estimates. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, before we get to the forecast, let's talk about the numbers. They blew it out the water. The numbers were absolutely fantastic. How impressed were you by what they did on the quarter?
They've absolutely crushed it, John. There's no doubt about that. I mean, this has been the big question for Netflix coming in after they kind of rejiggered their whole model, introduced those new initiatives with the password sharing crackdown, as well as the ad-based tier about, yes, they will capture some low-hanging fruit with that, but will they be able to sustain the subscriber momentum? And yes, they absolutely did. They blew it out of the water, as you just said, 65% above consensus. And just over the past 4 quarters, ever since they've implemented these initiatives, they've added roughly 40 million subscribers. That's a huge number. And this year, this was, by the way, one of their strongest second quarters ever right after COVID, 8 million subscribers. Second quarter is seasonally very soft. But the one thing I think that we need to kind of take into account here is that going forward, yes, we're going to see subscriber momentum, but we also need to pay attention to the fact that last year, third quarter, was when all of these changes kind of went into place. So we're going to be lapping that in the third quarter. So we might see that slight slowdown come the third quarter and the fourth quarter.
I was really taken by the success of their ad-based tier, but so much more that Netflix is saying, we have more space to fill, and more people are joining this tier, so we think we can bring in more people. But the fact that they still have more space, and they've not sold all of that ad space, what does it tell you about the willingness of advertisers to come in and pay maybe what Netflix wants them to?
Yeah, so the ad-based tier, I think, is a source of both the greatest opportunity for them, but it's also creating some headwinds right now. So they're doing all the things. They're kind of putting all the plumbing in place. They're putting all the infrastructure in place to kind of ramp up that business. But they did point out that it's not going to be a meaningful growth driver in 2024. But in 2025, they're going to scale it up. So they are investing in programming. Live sports is definitely a category that advertisers are super interested in. You have a captive audience. They talked about the roast, the Tom Brady roast that performed really, really well for them. So they're definitely kind of getting more into this live category. That they have investments in NFL games, 2 Christmas Day NFL games later this year. You have WWE programming. You have that big boxing match between Tyson and Jake Paul. So they're doing things to kind of capture the advertiser wallet for sure. But there is a lot of stuff that needs to happen on the tech side. So there are a lot of, in-house ad tech investments that need to take place before advertisers can really come on board.
Hey, Geetha, you mentioned a lot of, really big titles that or programming that's come through. Do they start to almost become like we used to treat a movie studio, where the company becomes super sensitive to these, big chunky products each quarter, and we have to kind of cover them in that way?
Not so much for Netflix, because they have both good depth and good breadth of titles. And yes, their originals are performing really well for them. I mean, they called out Bridgerton, which was an absolute massive, monstrous success. Over 1 billion hours of that one program alone streamed in the second quarter, the biggest original by far globally across all streaming platforms. But it's not just originals that's performing for them, and it's not just one content title. They do have the advantage of having a lot of locally sourced titles that have done really well for them. They called out India as being one of their strongest markets. In fact, it was the second largest market in terms of subscriber growth. And they spoke to a lot of local Indian titles that have really kind of resonated with the audience there. And then again, they're going across different genres of programming. And it's not just their own programming that they're investing in. Remember, they're also licensing a whole lot more of content. And a lot of that licensed content is actually doing really, really well on their platform. Suits, of course, was that great example. But it's not just that. I mean, Your Honor, so many of the other shows from CBS, Warner Studios are performing really well for them.
Geetha, it's great to catch up. Geetha Raghunathan there of Bloomberg Intelligence on the latest with Netflix. I know many of you are just tuning in, so welcome to the programme, and I'm sure you're only interested in one story. It's not the politics this morning. It's what's happening with a lot of flights around the world, and particularly in this country as well, as you wake up stateside. So this is what we understand waking up this morning here in New York. The global aviation is facing a lot of difficulties related to a computer outage related to one specific company, which is CrowdStrike. CrowdStrike in the pre-market is down quite hard in early trading. This is what they've got to say. We've had an update from them in the last hour, and then I'll get you an update on what we've heard from some of the airlines as well. CrowdStrike is saying they've actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or a cyber attack. The issue has been identified, isolated, and a fix has been deployed. We've heard from a couple of the airlines stateside already, including United and Delta. I'll tell you what United's saying to customers at the moment first. They say a third-party software outage has impacted computer systems worldwide, including at United. We are resuming some flights, but expect schedule disruptions to continue throughout today. We have issued a waiver to make it easier for customers to change their travel plans. So that's United Airlines. Something similar from Delta as well, Danny. They say this. They've paused its global flight schedule this morning due to a vendor technology issue that is impacting several airlines and businesses around the world. We're working to resolve the issue as quickly as possible to resume operations.
The thing is they're talking about it being, it's paused its flight schedule this morning. United is talking about its issue for Friday. I'm curious to see when these airlines start coming out and saying, hey, not only are we going to give you a waiver if you flew today, but maybe for Saturday, maybe for Sunday, because the problem is more than just fixing the IT issue. We've been talking about this, John. Planes are out of place. There are people waiting to get their tickets. It's impacting a lot of things, and it's not something you can just flick a switch and fix.
I've promised you updates every 5 or 10 minutes or so on Bloomberg TV until we get that ultimate fix. Let's get another one for you now with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Microsoft and cybersecurity firm CrowdStrike moving lower in the pre-market as we see a global IT outage stemming from the two firms. We are now hearing from CrowdStrike CEO George Kurtz saying the company has identified the update that crashed Windows systems around the globe. He says a fix has been deployed. But the disruptions continue. Both United Airlines and Delta, as you said, here in the U.S. have temporarily grounded flights, according to the FAA. And new developments in the investigation on the attempted assassination of the former president. Bloomberg has learned the FBI used unreleased technology to access the phone of the man identified as the shooter. The agency appealed to Israeli intelligence company Cellebrite, which supplies tech to several U.S. federal agencies. The FBI agents aim to pull data from the device to help decipher his motives for the shooting last Saturday. And a drone strike in the heart of Tel Aviv killed one man and injured at least 8 others. The attack is being claimed by Houthi militants and is believed to have been launched from Yemen. The Iran-backed group saying it hit Israel's commercial capital with a new type of drone difficult for radar to detect and vowed to target the city and other parts of the country again. If confirmed, it would mark the first deadly attack on Israel by the Houthis. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on in the programme. Up next on the programme, the NASDAQ and everything else.
If we look back to just last month, the divergence between NASDAQ and everything else was becoming very stark. And you can go one or two ways with that. You can see tech fall down or the rest of the world catch up. And the latter is happening. I think it's quite positive and durable.
That conversation up next, live from New York City. This is Bloomberg. Live from New York City, equity futures just about unchanged on the S&P 500. Under surveillance this morning, the NASDAQ and everything else.
If we look back to just last month, the divergence between NASDAQ and everything else was becoming very stark. And you can go one or two ways with that. You can see tech fall down or the rest of the world catch up. And the latter is happening. I think it's quite positive and durable. If we see earnings surprise to the upside, valuations are completely reasonable, if not wildly cheap relative to history.
It's the latest. Tech stocks facing further pressure as global outages disrupt companies worldwide. The Nasdaq 100 already on track for its worst week since April, ahead of tech earnings kicking off with Google reporting Tuesday. Amy Wood-Silverman of RBC writing this: we are in a lower point for volatility, and I don't necessarily think we get much action until the Democratic National Convention and tech earnings. I think both are major event risks for this market. I'm pleased to say that Amy's with us now. Amy, let's get straight into this. You've talked about it for a while. The lack of demand for downside protection around some of these themes. Has that changed since we last spoke?
Good morning. It actually has, John. And I think that actually in and of itself is quite important because we've been dealing in the options market with far more right tail risk since the beginning of the year, FOMO and MOMO. And to have that sucked out of the market, that exuberance and more focused on the downside, I think is a little bit telling, in particular in tech.
I mean, we've seen some pretty big downside, Amy, just since that CPI report. Meta's down 11%, Nvidia 11%, Amazon 8%, Alphabet 7%. A lot of people have been waiting for these shares to sell off, for some relief to finally buy them. Is there any sense that this is a dip you can actually buy?
Yeah, it's a great question. And we've been watching that closely because in the past earnings cycles and kind of pre-earnings cycles, you do see that buy the dip. You do see that call skew inversion and you see people kind of still need to participate. I would say, Danny, we're seeing a little bit less of that. And when we look at that right tail versus left tail, you're still more focused on that left tail headed into earnings this season. And for a lot of us, when we talk to investors, we're kind of saying, look, this earnings season could really be a show me season for that AI story. You're certainly seeing that sentiment in the derivatives market, and we'll see how that plays out. That's why I think it's such a major event risk.
Hey, Amy, it's Stuart. How are you?
Good to see you, Stu.
Yeah, you too, Amy. I guess my question would just be on like S&P puts versus VIX upside. As you mentioned, the put wing hasn't really worked. We're in a rallying market. People may be looking at the low level of the VIX. Do you have any view there on how to approach hedging going into these events?
Sure. So look, I think, when you look at S&P puts versus VIX calls, my favorite stat is 2022. You got that 20% drawdown in the S&P, and the P put index managed to draw down 21%. So, put skew has been a fail. I think that's burned some folks. But when you look at VIX call skew, that's actually at historic levels. I'm sure you track that as closely as I do. And you are seeing people deploy VIX call spreads all throughout. And I think that fat tail, but kind of flatter at the money structure is something that people are really thinking about in this kind of low implied correlation environment. And I think that is concerning to derivatives investors. And I think that's why that focus is there, especially in VIX.
Amy, the one thing I'm super confused about is what to do with the DNC at the end of August. What do you do around the DNC when you don't know who the candidate is going to be?
Yeah, I mean, your call is as good as mine. Look, I think when we saw, that big rally in IWM, that spread in IWM versus S&P blowout, some of that was obviously rates related, but some of that obviously was a knee-jerk reaction to the Trump trade. And, one thing Lori Calvisi and I have talked about a lot is it's just a really long road until elections. It's a very much anything can happen. We don't really know how the market will behave. It's Kamala Harris against Trump versus Biden, so I think a lot of things still can happen, that we see volatility potholes around that. I don't think you can count on kind of the definitive way that the markets are pricing the election right now.
Even so, this is a market that ran up a lot, especially in the small caps. Amy, is there a sense that if we do get news that Biden is dropping out and stepping aside, that it is just a plain and simple risk-off event?
It could be. I think when post the assassination, the markets essentially bet for a more definitive Trump victory. And when you saw that happen, you essentially saw the market grab back to the 2016 playbook of Trump versus Biden. I think it was very knee-jerk in the sense that you're assuming a lot of these old economy plays that Trump had talked about in the past are going to be the winners of the future. I don't know that that's necessarily true. If you look at some of the backers of Trump right now, Elon Musk, for instance, could that change his policy? I think the answer is yes. Whereas on the Biden side, I think it's more continuous, as Stu had said earlier, that a lot of those policies remain the same. I think a lot of that volatility is on the Trump side versus the Biden side.
Well, whatever's behind it, Amy, it did have the effect of stopping the momentum trade in its tracks. That had been the dominant thing, the one thing that everyone had clung on to. And that raised a lot of fears that so many people were in this momentum trade that when it stopped, it'd be painful and violent. I mentioned those stocks were down, but it's hard to say it's painful and violent. Amy, where do we stand on that? Is that so-called big momentum trade under threat?
Yeah, I think that's very concerning. And when you kind of look back at the last even 10 years on a factor basis, who is the big winner? It's been momentum. We see evidence of that in the options market. We see that through that right tail risk. And when that starts to bleed and you get that really violent rotation underneath, the question is, what are the factors that win going forward? Is it small cap? Is it value? Can those be sustainably true? The situation is, I think people have been waiting for this for a really long time, but we've had this fit and start where it kind of looks like momentum is losing steam, and then we go right back to it as soon as there's a flight to safety. So I wouldn't count it out yet, but I think that's the bet as we get closer and closer to the potential first rate cut.
Amy, you mentioned a flight to safety there. Are you more concerned about the rotation in falling markets or in rising markets at this point?
Yeah, look, I think it comes down to the math of the market. So, we talk a lot about the bad breadth of the market. And sometimes when you think about the math, it's just very simple in the sense that if tech goes, the whole market goes. So to give a good example, we've had these big days where IWM has substantially outperformed S&P. But in a lot of those days, when you kind of look back to those specific days, the overall market is still down. So to circle back to your question, I would be more concerned in terms of down markets because, if we go back to a normal spot up, spot down, volatility up market, then you're also more concerned about that correlation pickup as well in the market.
Amy, super smart. As always, it's good to catch up with you. Amy Will-Silverman there of RBC. I'm sure many of you are just tuning in which case, welcome to the programme. Plenty of updates for you on that global tech outage hitting businesses worldwide, in particular hitting the airlines. So let's start with the updates that we're hearing from CrowdStrike and Microsoft, two of the tech firms that a lot of people are looking to responsible for some of this action. This is what CrowdStrike has to say. They're actively working with customers impacted by a defect found in a single content update for Windows hosts. This is not a security incident or cyber attack. The issue has been identified, isolated, a fix has been deployed. That was from CrowdStrike in the last hour or so. That stock is slowly recovering in the pre-market. It was down more than the 13% it's at currently. Microsoft's still lower by 1.7%. Microsoft has this to say: the underlying cause has been fixed. However, residual impact is continuing to affect some Microsoft 365 apps and services. Danny, they say we're conducting additional mitigations to provide relief.
That's going to be concerning to a lot of people and a lot of industries, because that's what this has affected. Obviously, the most noticeable one, because you're going to see the lines start piling up, is the airports of people not being able to fly. But it's everything from people's commutes this morning, D.C. and New York metro systems issues, to Norges Bank having to conduct systems via email and the phone for liquidity operations. It is people getting back to basics, and it is an issue, perhaps, that it is affecting so many industries, and it is stemming from one singular company.
It's amazing, isn't it? Most airlines we hear, the likes of United, Delta, offering waivers if you want to make some changes. United saying this: a third-party software outage impacted computer systems worldwide, including at United. We are resuming some flights, but expect schedule disruptions to continue throughout Friday. We have issued a waiver to make it easier for customers to change their travel plans. Stuart Kaiser with us through the last hour or so. Stuart, the good news is you're here and not in an airport. Can we get a final word from you going into the weekend? We started the programme here, what we should be looking for. Let's park this and hope it's dealt with. I still want to understand what the market's going to look like next week if Biden steps aside and we're looking at candidate X, whoever it might be, versus Donald Trump, what this market ultimately does.
Look, I think if Biden were to be replaced, then the aggressive pricing of Trump odds obviously has to come under a little bit of pressure. I think you start to get a compression of the GOP Dem odds, and that adds some uncertainty back into the system. It's interesting because next week was on tap to be a huge micro week, right? There were no major macro events. It was going to be all about large cap tech earnings. And now we might, kind of get a political uncertainty reintroduced back into the system. So, yeah, I do think we'll probably put a little pressure on some of the Trump trades that have worked over the course of the last week or so. And just bigger picture, I just think it, to Amy's point earlier, it makes the DNC just such an incredibly important event. And I would imagine if they're going to do that, they've teed up, hopefully, a process, to deal with this. I think the bigger risk would be he steps aside and there you say, hey, we'll get back to you, or we're, deploying solutions and sending out mitigations, right? That's not what you want.
It's quite an incredible event risk. Stuart, where do I hide? Because it used to be tech. It's been wobbling this week.
Yeah, I mean, it's funny with tech because it's a growth stock, but it's also probably the cleanest balance sheet in the world. Multiple of large cap tech have introduced dividends this year as well. So, I think some people view that as the quote unquote new defensive. I would say within the defensive space, the stuff that's underowned is going to be areas of staples, REITs, and kind of areas of healthcare. And I think you've seen all those sectors perform very well. We think the market has been a momentum, growth, and size market this year.
Yep.
All three of those factors are deeply short, all three of those sectors. So if you get kind of this risk-off rotation, it should benefit those areas.
Stu, this was great.
Thank you.
Thanks for being with us, sir. Appreciate it. Stuart Kaiser there of Citi. Coming up next on this programme, Rob Casey of Signum, Katrina Dudley of Franklin Templeton, Bloomberg's Sid Phillip, and Jerome Schneider of PIMCO. Plenty of updates on a global, worldwide tech outage. Up next in the second hour of Bloomberg Surveillance.
The economy is not as strong as I think people expected.
The debate is it moderating into a soft landing, or is it moderating into some type of sharper slowdown?
We're definitely in a soft patch for the U.S. economy, but that soft patch has been concentrated.
We're going to get a soft landing, but the risk of that turning into something not so soft, I think, has to increase.
The risks of a problem developing as opposed to a continuation is significant.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now. What a busy morning already. I know a lot of you are struggling with global aviation, so I'm promising updates throughout the programme this morning on Bloomberg Television. Here's another one for you. Planes have been grounded at several airlines throughout the last 12 hours or so, following some issues related to the cybersecurity firm CrowdStrike and Microsoft as well. We've heard from both of those companies in about the last 60 minutes or so. So I'll go through those companies individually and start with CrowdStrike, who said about an hour ago that they're actively working with customers impacted by a defect found in a single content update. They say the issue has been identified, isolated, and a fix has been deployed. I think the really important part of their statement this morning was this is not a security incident or a cyber attack. We heard from Microsoft in the last, 20, 30 minutes or so, Danny. They had this to say: the underlying cause has been fixed. So it looks like we've got a fix. They note, though, the residual impact could continue, and airlines in different places are going to deal with this in different ways.
I know we'd be having a very different conversation if this was a cyber attack, but perhaps we should be having that conversation instead, because it just shows the interconnected world, the interconnected nature of this, of so many companies relying on one singular company to get their cybersecurity done. There's an irony to it that it is a cybersecurity company that caused all of this, but it shows some sense of fragility when you can have airlines, you can have public transportation, you can have hospitals in the UK, you can also have other industry and banks in Australia come under issue. The fact that this is global and cross-industry, I think, is alarming.
That's what makes it unique this morning and somewhat rare. And I think Guy nailed it about 60 minutes ago. We're used to local outages in specific industries with specific companies. We're not used to global outages that go beyond just, say, the airline businesses, to restaurants, to payments, to banks, to login. To log in at JP Morgan. You saw that report earlier this morning. You were talking about it. This is quite bizarre around the world right now.
There are traders talking about that some of their issues trying to trade things like derivatives has been a little bit more difficult. My favorite has to be Norges Bank doing some of their liquidity operations via email and via the phone. But what do you do about it? Again, CrowdStrike is so dominant. Today obviously shows that. It's not like we can turn around and all of a sudden diversify. And I think the conversation needs to be had. This is a world that's becoming more tech-enabled. We're talking about day in and day out about how the tech players are so dominant and the big keep getting bigger. It's maybe not just a CrowdStrike issue. What happens when all of a sudden we can't rely on maybe one of these chip companies? What if there's a geopolitical issue? The world is so interconnected.
CrowdStrike right now negative by 12%. It was a lot worse than that in the pre-market earlier this morning, recovering just a bit, down 11.9% in early trading. Equities elsewhere on the S&P 500 shaping up as follows. Equity futures look a little something like this, just about unchanged. No price action in the bond market to speak of. The 10-year about 420.19. Coming up this hour, we'll catch up with Rob Casey of Signum Global Advisors as President Biden faces growing calls to bow out. Katrina Dudley of Franklin Templeton as stocks fall for a second straight session. And Jerome Schneider of PIMCO as Fed officials signal a September rate cut. We begin with our top story. Global tech outages linked to Microsoft and CrowdStrike causing widespread business disruptions. A growing list of companies reporting software glitches, including banks, airlines and restaurants. Microsoft saying the underlying cause has been fixed, but noting residual impact continued to affect some of the 365 apps and services. The CrowdStrike CEO saying the outage was not the result of a cyber attack. Guy Johnson on top of the story for us in London throughout this morning. Going into the morning here in the United States. So, Guy, last time we spoke in the last 60 minutes, it just sounds like we've got a fix and slowly these airlines are getting back to work.
It'll take them a while, John, and that's the issue that we are now faced with. It'll take quite some time. United Airlines putting a statement out fairly recently within the last few minutes talking about the fact that it is resuming some flights, but it's expecting disruption to continue throughout the day. It's got a waiver in place so that airline passengers can rebook. Delta's working on something similar right now. The longer it continues, though, the longer the disruption will last for. Aircraft will be out of position, backlogs will increase, airports will be filling up, bags will be in the wrong place, aircraft will be in the wrong place, crew will be in the wrong place. It takes a long time to fix kind of some of this stuff. And as you say, John, this isn't just a US problem, it's not just a European problem, it's not just an Asian problem. This is a global problem. And Danny was talking about the interconnectedness. That is what we are seeing. These are systems that talk to each other around the world, and therefore it takes a long time ultimately to resolve them. In some ways, it is similar to the supply chain story that we've been talking about during the pandemic and the post-pandemic period, and we're still experiencing in some ways during in the aviation sector. We learned that maybe you can't rely on single source suppliers, that you have to have multiple suppliers, that you can't rely on one system, you have to have multiple systems, and all of that, John, inflationary. And here's just another example of that.
Guy, I know you're going to be heading to the Farnborough Air Show next week. I'm really looking forward to that. And you're going to be speaking with a lot of industry leads. Do you expect them to be able to actually put in place any differences to avoid something like this again, considering, I mean, this is an industry that has had a lot of post-COVID issues and a lot of issues with investing into this exact type of infrastructure.
It's about redundancy. It's about making sure that your systems can cope when key parts of it go down. And again, Danny, you were talking about it. The interconnectedness of all of this is critical. You have one single point of failure, and then you start to see a cascading effect working its way through the rest of the system. If you can't check people in, if you can't have their bags checked in, if you can't communicate with pilots when they're sitting there at the gate waiting to push back for their aircraft, all of these things, these single points of failure are so critical. And that's where I think the redundancy story will come in. But it's incredibly difficult. This is an industry that's already playing catch-up, significant catch-up in terms of the industry story. And you can see that this morning. Different airlines are being affected with this story in different ways. And that just speaks to the fact that they're not all kind of uniformly upgrading their systems at the same time in the same places doing the same thing. It's very piecemeal. And that's where ultimately the problem, I think, is going to lie and will continue to lie in terms of the vulnerability of the system that we are seeing demonstrated this morning.
Hey, Guy, appreciate the update. Super sharp as always. Bloomberg's Guy Johnson out of London on the latest with some of the airlines. It's not as if the airlines were having a great time anyway. Guy alluded to that. For the likes of Delta and United, basically flagging summer was already a bit soft.
Yeah, exactly. And this is supposed to be one of those weekends of really high travel volume, too. Already you have a soft summer. Already you have to issue waivers to people. And already you just have a staff that maybe isn't up to the task. Not that the individuals aren't up to the task, but you don't have the workforce that you once did to kind of work around some of these issues. Again, it's basic stuff here that Guy was talking about, checking people in, getting them their tickets, putting luggage somewhere. If you don't have the people to get around that when you've got to do stuff by hand, it's going to be a problem and take a while to resolve.
We're coming back to this story in about 5 minutes' time. Yahira will bring you an update. Look out for that in just a moment. Let's turn to politics. President Biden facing mounting pressure from his own party to end his re-election bid. A person familiar with the matter telling Bloomberg some members of the president's cabinet have discussed whether his campaign has reached a breaking point. The Democratic Party in stark contrast with the GOP, which is firmly rallying behind Donald Trump. AMH joins us now from the RNC. Anne-Marie, how close are we now? Because it certainly feels like over the last 24 hours, we've got closer to President Biden stepping aside.
Absolutely. The pressure is mounting on President Biden. He's going into one of the most consequential weekends of his political career. These are high-level, prominent Democrats leaking to the press, talking about their concern that he cannot win this election come November 5th. Here's what the New York Times reported as. Biden has, quote, begun to accept the idea that he may not be able to win in November and may have to drop out of the race. We heard from Senator Tester yesterday. There was a leak about President Barack Obama calling other Democrats, saying that their concern is that his election viability has greatly diminished. The question, of course, remains, who do they put then at the top of the ticket? And this is something actually Republicans have been talking about. They don't want to get over their skis. They have run the data behind what a Biden versus Trump election would look like on November 5th. They have not run the data in full, really, or how they're going to run a campaign if it is someone else. And we heard from Frank Luntz yesterday, famed Republican pollster, and he said, it's not so much that Trump is winning, Joe Biden is losing. What kind of election could we see if the Democrats start to move? Of course, the issue is the timeline. The DNC is next month. There's some members of the Democratic Party that want to push up the roll call for Biden to really get his grip on the party. So there's a lot of infighting right now from the Democrats, and the timeline is really key here if they are able to move. But the pressure is certainly mounting on the president. Stark contrast from the grip Donald Trump has on this Republican Party, and that was really out in the open yesterday with this emotional and at the end very energetic speech going into the election.
I think we all need to talk about the process as well. AMH from the RNC. Anne-Marie, thank you. Let's turn to Rob Casey now of Signum Global Advisors. Rob, great to catch up with you, sir. Thank you for being with us. Before we talk about the process, and I'd love your thoughts on the process because you guys specialise in this kind of stuff, I want to talk about how close we actually are now, because it feels like you and the team have changed your base case about whether President Biden stays in this race. Where are we now?
Yeah, John, we have, and thanks for having me on. You know, as of yesterday, I think that the tide really has turned. Anne-Marie, totally agree with her. This weekend is the most important of Joe Biden's political career. The issue for Biden and for Democrats is we've essentially had 3 weekends in a row, or 3 weekends out of the last 4, that are the most important of Joe Biden's career. After the debate, after the NATO summit, and now this weekend coming up. We just don't think that that path is sustainable. We can't have every weekend the question of whether or not Joe Biden is going to drop out. Joe Biden can't have it. Senate Democrats, House Democrats, who are running very tight races, nobody can have it. So we don't think it's sustainable. Clearly, congressional leadership is thinking the same thing. We've heard from Chuck Schumer, we've heard from Leader Jeffries, we've heard from Nancy Pelosi, all of whom, it seems that they're going more public with further pressure on Biden to step aside.
So let's go to the weekend. Let's assume this happens, just for the sake of the following conversation. Let's assume he sits there at the weekend and delivers an address to the nation and talks about stepping aside. One, done. What does the process look like going into August, Rob? What do market participants, our audience, need to think about?
Yeah, absolutely. Well, I think the first moment after that, there's going to be a scramble within the Democratic Party. Obviously, everybody's sort of preparing for this behind the scenes now. Nobody's able to explicitly prepare for it until it happens. We, with very high conviction, believe that Vice President Kamala Harris will be Democrats' plan B. Now, it may not be that she is immediately coronated or Biden immediately says, I'm moving on and handing it to Kamala. There's a chance that we have sort of a mini contested convention in August. But I think very likely and almost immediately, it will become clear the Democrats are rallying around and coalescing around Vice President Harris, which they need to. I mean, they can't have a contested convention after Republicans had, one of their most successful conventions in recent history, entirely united around and behind Donald Trump.
Rob, it's a catch-22, though, because if you do have Democrats who are united under one candidate, presumably Kamala Harris, as you were talking about, then it gets back to this criticism that they faced before, that they're running an undemocratic-like type process to have their candidate up on stage. How do they get around those sorts of claims if they do unite under her?
Yeah, I think it's a fair criticism. And, I think if we see a kind of backroom deal situation, there will certainly be more criticism. I think the way for Democrats to get around that is potentially say, okay, we're going to have an open convention. Anyone who wants to throw their hat in the ring is more than welcome to. But, a little bit more privately, coming from Biden, Schumer, Jeffries, Pelosi, the whole leadership gang, a lot of pressure for people to stay on the sidelines and let Kamala run her race. We've already seen Gavin Newsom, governor of California, say that he would not throw his hat into the ring. That's a surprise, given he's essentially been campaigning for president over the past 2 or 3 years. We've heard similar from Governor Gretchen Whitmer and others who it seems like they are not incredibly willing to challenge Harris in this hypothetical.
I mean, I can't help but wonder, Rob, if part of that is just they know they're going to walk into a very difficult campaign and it might bruise them for their chances in 4 years from now.
Yeah, I think that's fair. I mean, one of the most important aspects that we have to remember is the Biden-Harris campaign has raised hundreds of millions of dollars. They have about $100 million on hand as we speak today. And Harris would be able to use that money almost immediately. She wouldn't be able to use it immediately, but essentially it would be hers should Biden step aside, because her name is on the ticket. Newsom's name is not on the ticket. Whitmer's name is not on the ticket. All of these potential candidates would be phenomenal candidates, either in 2024 or 2028, but they just don't have the infrastructure. They don't have the funding available to them right now to immediately challenge Harris and then to immediately challenge Trump.
What are you thinking of in terms of a VP, if it is Kamala, Rob?
Yeah, Governor Andy Beshear from Kentucky, Governor Roy Cooper from North Carolina, potentially Governor Josh Shapiro from Pennsylvania. Of course, it doesn't take a genius to know that the unifying factors among those three and others, moderate, white, male. That is probably a necessity for Vice President Harris, who herself is not incredibly progressive on policy, but whose profile certainly groundbreaking, ceiling-shattering, and thus perceived to be progressive by many Americans.
I have a feeling, Rob, we might be talking again this weekend. So I'm looking forward to that if we have to. Hey, Rob, thank you, sir. Rob Casey there of Signum Global Advisors. I want to get you an update on stories elsewhere. So here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Microsoft and CrowdStrike now both saying they are working to fix the underlying cause of this global tech outage. Shares of both companies moving lower in the pre-market. Microsoft saying it's still seeing, quote, residual impact for some of its 365 apps and services, which are used by businesses around the world. Meanwhile, the CrowdStrike CEO saying a fix has been deployed, but disruptions continue. The FAA saying it is closely monitoring the situation as major carriers, including United and Delta, ground flights. Meta CEO Mark Zuckerberg called former President Donald Trump's initial reaction being shot at as badass, but stopped short of endorsing Trump. In an interview with Bloomberg's The Circuit, Zuckerberg also said changes were being made to Facebook to have less political content.
I've done some stuff personally in the past. I'm not planning on doing that this time. And that includes, not endorsing either of the candidates. Now, look, there's obviously a lot of crazy stuff going on in the world. The historic events over over the weekend. And on a personal note, it's, seeing Donald Trump get up after getting shot in the face and pump his fist in the air with the American flag is one of the most badass things I've ever seen in my life. But look, it's, and I think, look, it's, at some level as an American, it's like hard to not get kind of emotional about that spirit in that fight. And I think that's why a lot of people like the guy.
And take a look at shares of Hawaiian Electric. They're up nearly 40% in pre-market trading. It's one of several companies that have tentatively agreed to pay more than $4 billion to resolve hundreds of lawsuits over the wildfires that ripped through Maui last year, according to people familiar with the deal. The agreement would settle suits on behalf of thousands of homeowners and businesses against the company, which operates the utility on the island. It's not yet clear how much homeowners or business owners will receive. That's your Bloomberg Brief. John?
Yahara, thank you. I want to go back to Mark Zuckerberg and not the work the Stardust has done, which has been pretty phenomenal. I think we all agree on that. That felt to me like Mark Zuckerberg was trying to warm up to Donald Trump, the former president, after the former president and others in this campaign have gone after his company and him directly quite a few times.
Yeah, but typically Donald Trump really softens his tone when you go and visit him in person. And I don't know if Zuckerberg can wear that if he goes to visit Donald Trump.
Watch this space. Watch this space. Up next on the program, the Great Rotation, pairing back.
Until you see the economy starting to reaccelerate, it's really hard for those smaller cap companies that have a tremendous amount of balance sheet and operational leverage to outperform for a sustained period of time.
That conversation up next, live from New York City this morning. Good morning. Live from New York City, welcome to the program. Equity futures here just about positive by 0.05%. Bond yields not doing much, higher by not even a basis point. The 10-year 420.78. Under surveillance this morning, the Great Rotation pairing back.
I still think the fundamentals favor your larger cap and your growth of your names. We'll see, right? Yep. But until we see the fundamentals change, I'm still not entirely sure that you're going to see the broadening out that a lot of people hope. Until you see the economy starting to reaccelerate, it's really hard for those smaller cap companies that have a tremendous amount of balance sheet and operational leverage to outperform for a sustained period of time.
Here's the latest. The small caps coming back down to earth following their best ever 5-day performance versus their large cap peers. Katrina Dudley of Franklin Templeton with this to say. The biggest issue for investors is the concentration we have seen in the market that is driving returns higher, but with significantly lower breadth. Katrina joins us now for more. Katrina, we've been trying to address that over the last couple of weeks. Do you think this move that we've seen is sustainable?
I think we hope it is sustainable in terms of the rally that we've seen in the small caps. And why do we think that? Well, as I said, the concentration of the market and the amount of market cap that's represented either by the Magnificent Seven, as we call them, or tech generally, is at historically very, very high levels. And we're hoping that some of that performance can spread into the smaller cap area. One of the reasons that we're actually optimistic is our view on investment and investment spending, and we think that that will disproportionately benefit the small cap companies over those larger cap names.
What do you think of earnings so far? And maybe you can't name specific names, so I can do that for us. The likes of Delta, United, Pepsi, it doesn't sound great on the consumer front. And when I think about small caps and I think about regional banks, it feels like we're piling into cyclicals at a time that some companies are telling us things aren't that great. What would you say to that, Katrina, this morning?
Okay, you are absolutely right that we have seen a lot of pressure coming from the consumer, but that pressure and that concern is not new. We have seen it for many quarters ahead of time. And so companies, when you are seeing these trends early, can prepare. So we've seen something like a McDonald's talk about, bringing down the cost of its offering and adjusting to this new reality. And that is positive because as long as companies are able to adapt, what we see as a negative headline can actually be an opportunity for a company to continue to develop and move their business forward. So yes, we are watching the consumer. The second part of that is some of the pressure that we're seeing is at the lower end of the consumer. So if you look, the bottom 40% of income earners actually represent less than 20% of spending. So we need to really understand this kind of broad range of spending across our economy and who is really driving the numbers.
I mean, they are pockets, but there are pockets of weakness, Katrina. And if you just look at the fund flow, people have just been buying outright small cap ETFs. Bank of America's latest note says it was the second biggest inflow on record over the past week. Do you think there's an issue with people just diving into the sector as a whole? Do they need to be more picky?
I like picky investors. They're my favorite type of investors because a picky investor is really saying there are benefits to being active and to really understand what you're buying, particularly in the small caps. You're kind of buying a basket of everything. And what we're saying is actually you do need to sort through that basket of stocks and identify those companies that are trading at good valuations. And that's something I always talk about. Valuation is one of the key drivers of stock performance. But also you want to look and make sure that they've got strong financials, that they're not, pressured or that they're prepared for the interest rate rises that are in the past but are now really starting to come through our financials. So I think in the small cap land, it really does pay to be an active investor because otherwise you're just kind of buying what I would call a hodgepodge, but just a diverse and a highly varied range of investments.
But some would argue, Katrina, that as long as it seems like Trump has good odds to be president and that the Fed is going to be cutting rates, that there are things that are under love that should be going up anyway. Are those two pillars of an argument to say maybe you can just buy it regardless, that they're just so unloved that it makes some sense?
But that idea that just because it was unloved and suddenly some macro factors are going to change and that's going to make everybody love a stock, I think that that's really not understanding the reality of what drives stock performance. Because just because people didn't like a company before, if you didn't like a buggy whip manufacturer when we had that transition to cars, it doesn't matter if we had 100 or 1,000 more cars on the road, we still don't need those buggy whips. So you really need to understand the business. You can't just say that because it was unloved yesterday, I've got this positive macro backdrop that things are going to get better, because I just think that that is not the reality, particularly in small caps.
Katrina, well said. It's good to hear from you. Katrina Dudley there of Franklin Templeton. We spent some time on this on the last week, the Everything House rally. What wouldn't you buy in the Everything House rally is a really important question.
Yeah, but right now, investors are indiscriminate. Just based on the fund flow, the fact that you have the second biggest inflow ever to small cap ETFs, maybe some people are going to get punished for that when they realize a maturity wall is coming and some of these companies with a lot of debt are going to start to struggle.
We said it earlier this week. What are you buying when you buy small caps? Remember what Dan Greenhouse had to say?
And said it's...
How many companies can you name in Russell 2000?
Basically just Abercrombie.
And some regional banks. Coming up next on the programme, tech outages disrupting airlines and airports around the globe. The latest update up next. Two hours away from the opening bell, here's a snapshot of the price action for you after the biggest two-day decline on the S&P 500 in a number of months. Pretty steep, that two-day decline on the S&P, the worst week since April on the cards now. Down over the last 2 days by something like 3%. Even the small caps caught up in this. Equity futures positive now by 0.1%. The Russell up by 0.1. It's a small bounce. In the bond market, the 2-year, a little bit confusing in the last 24 hours. The Fed's been quite consistent with getting closer to rate cuts. The data wasn't great. Jobless claims were higher than expected, but yields have started to climb a little bit higher at the front end and back towards 450, 448, 33. I want to turn to the FX market, foreign exchange, and look at the euro. Euro dollar at the moment, 108.90. Had lots of people commenting on the ECB. This came from Deutsche Bank. They're on course for a second rate cut in September. That seems to be the view on the street at the moment, Danny.
It does, but Lagarde left it wide open. And not only that, some of what we heard reportedly from ECB officials afterwards is that they don't know whether it's going to be even more than one cut after that. It might be the stop-start approach from the ECB because, by all accounts, they made a mistake last time. They over-telegraphed this cut, and the data made it very awkward, coming in hotter right before, and then even upgrading their own inflation forecast. You can feel this reticence from them that they don't want to make that mistake
That
again.
line from SocGen, data independent as opposed to data dependent. Alberto Gallo was on the programme yesterday from Andromeda Capital, and he made the point that forward guidance has gone. And it's so much harder to have forward guidance in this environment, particularly given the political considerations going into 25.
Absolutely. And look, it's one that's very alive and present for the ECB. We can talk about the U.S., but you have a France issue to deal with where spreads are widening, and they don't want to have the appearance of trying to help and trying to save them. So it makes it all the more tricky in trying to advocate for a cut when maybe the data is not exactly playing along.
That's the ECB. We can talk about the Federal Reserve as well. Ian Lingen of BMO put out this note in just the last couple of days and said this: we're operating under the assumption that any shift in fiscal policy out of DC as a result of November's decision wouldn't become relevant for the FOMC until the second half of 2025. In short, the election went from being a bear steepener to a bear flattener, given that Trump would lower the prospects for a glide path of policy rates back to neutral. That's the view of BMO. But this idea they can't do anything until the second half of 25. You need to see the policy, and then you need to wait for the impact of the policy before you can make a move.
Right, and they're the ones who are saying we need more data. We're not ready to cut at this moment. They're the ones who keep saying we need more data. But again, they want to avoid the appearance of being political. So how savory is it going to be if they say we're not cutting because we don't know what policy is going to look like in 2025? There are a lot of people who that would really upset. I don't think they can go there, John.
I think we're going into the quiet period for Fed speak, aren't we, this weekend? Looking forward to it. I know you all do too. But this time around, I haven't found the Fed speak so tedious. I think they've been quite consistent.
Yeah.
They haven't been all over the shop. They're basically saying we're getting close, we're not there yet. It looks like September.
And I think some of the language is kind of refreshing, talking about actual risks in this labor market, not beating the inflation thing over the head. Mary Daly has talked about it. We've even heard some of the language from Powell that they're worried about that two-sided risk. It feels like a more, I don't know, classic Fed. It's nice.
The balance of risk has shifted. Neil Dutter of Renmac on this programme in about an hour. He's not relaxed about things. He thinks they should be cutting this month. Let's go in July. Look out for Neil alongside Vishy Tirupattura of Morgan Stanley in about 60 minutes' time. Let's get you some top stories. Under surveillance this morning, widespread tech outages impacting services for companies around the world. The CrowdStrike CEO saying the outage is not a cyber attack. Microsoft saying the underlying cause of the issue has been fixed. CrowdStrike was down by, what, close to 20% early this morning, Danny? We're now down by about 10 in the pre-market.
Yeah, look, it's a problem for CrowdStrike because they are the one singular company behind this. Dan Ives is writing about this today, basically saying it becomes a household name, but not in a good way. It'll take time to settle down, but doesn't change our positive long-term view or cybersecurity sector. But this is the thing. He says it could create an opportunity for competitive displacements. And I think this is the threat for CrowdStrike. Because everybody sees how vulnerable we are, just relying on one singular company. The issue, though, how long would it take to replace some of your IT systems? How long would it take to disintegrate CrowdStrike from your servers? I mean, we see today what a mess it is in the airports. Are they really going to turn around and say, OK, we're going to look for a new guy to come in and fix all this?
It's outages like this that reveal just how vulnerable we are and how dependent we are on one single company. Just CrowdStrike. How many people understood that before coming into this? I certainly didn't. I'm an amateur around these stories. We'll catch up with Ed Ludlow, Mandeep Singh, both of Bloomberg a little bit later. I imagine they knew to some degree. But to your point, the threat for them now is ultimately their success, that everyone has been so dependent on them.
Right, exactly. It's a feature that's turned into a bug, if you will, and that it's across industry. So it's not really, OK, we need to go to the airlines. We need to talk to those executives and say, OK, we're sorry, this won't happen again. They basically need to put fires out around the world and around different industry. There's likely going to be some impact. But again, the question is how quickly can people pivot from this? How quickly can they turn to a different company?
We'll come back to this in just a moment and get you an update on some of the airlines. I know many of you are interested in that. I want to turn to this just briefly. Traders boosting bets on a September rate cut at the Federal Reserve. The latest Fed speak from San Francisco Fed President Mary Daly, joining the growing chorus of Fed officials saying recent inflation data has been good, adding that the job market is at an inflection point, and it's the nerves around labor. That's the change. That's the difference in the last few months.
I do find it interesting, though, that she also says we are not there yet. So she is a dove. She is getting louder, but saying we don't have price stability right now. Many people, as I know Neil Dutta argues, is that if you are at an inflection point, then you are there. You don't want to be in a situation where you're cutting after unemployment has already moved in a nonlinear way. Instead, they are still waiting for inflation to come down. So you could argue maybe September is too late. The crack's already there, and they should have been out ahead of this.
What's the difference in a couple of months? Neil's going to tell you a little bit later in the programme. Let's turn to this story. President Biden facing mounting pressure to drop out of the race. A person familiar with the matter telling Bloomberg some members of the cabinet have discussed whether his re-election campaign has reached a breaking point. It was Democratic leadership, as reported by CBS News, or rather ABC News, in the last couple of days that are starting to put pressure on him. This pressure is ramping up and ramping up going into the weekend.
The language that you hear these people, when you hear these reports from basically every single outlet, it is somewhat sad because they talk about a leader that they really respect and they really like. I mean, these are his allies, John. But they basically wanted him to go off the stage gracefully. They didn't want to yank him off. And we are left in a position where a lot of these people look like they might be trying to yank him off by talking to all these different outlets. So let's say Joe Biden decides he does want to bow out. I'm not sure what a graceful exit looks like at this point that doesn't leave some lasting damage on the Democratic Party.
Given how much he's given to public service over the last 50 years, he certainly deserves one, and we'll see what happens going into the weekend. I promised you this update, so let's get to it. The airline industry dealing with widespread tech outages, disrupting global service and temporarily grounding flights at United, Delta and American Airlines. Joining us now for more is Sid Phillips. Sid, can you tell us what's behind this? I think we should start there for people just joining us, and what the state of play is with individual airlines at the moment. Are we getting back to business, getting back to work?
Good morning, John. So essentially at the moment, airlines obviously are trying to get their networks back up and running. I mean, we've seen American Airlines lift their so-called ground stop, which basically means that they can now start getting aircraft back in the air. Delta Airlines and United Airlines still sort of have their ground stop going. They haven't yet lifted those. And that's sort of the, I mean, airlines across the world are impacted differently. We've seen airports impacted. And I mean, for some of the carriers that have massive network operations, for them, their network operation centers went down. And so they were unable to communicate with their aircraft. And that sort of really sort of put their entire operation in jeopardy. Whereas some airlines have check-in systems and their sort of booking systems affected. And so it's sort of a mixed picture across the board. I mean, there's been airlines affected from the US to the UK to Germany to India, and it's sort of wide across the board. I mean, we've seen Indigo and SpiceJet, the low-cost carriers in India, affected, as well as the Uniteds and the Deltas and the American Airlines. And I think it's going to take a long, long time for the airline industry to get back and running, because now you have aircraft that are out of place, you have crews that are out of place, and you have essentially a backlog of passengers that you need to get to their destinations in a way that you can sort of ensure that your operations get back to normal, get your aircraft back, and all those angry passengers who are sort of stranded are moved back to where they need to be.
And so it can't come at a worse time. It is the summer when demand is there, especially on a weekend in July. And we've heard from some of the airlines, Delta, United, Lufthansa in Europe, all having issues when it comes to some of their revenue with some of the demand. How does this shape perception and the ability of these airlines to fight through what already is a difficult period?
Yeah, this is the start of the summer travel season, which is typically when all the airlines make their money. And this just adds one more complication to an already complicated picture where airlines are struggling to get demand going again, get yields up, and now they have to deal up with the fallout of this sort of outage. And it just sort of adds one more layer of complexity in an already complex environment. And we're going to see airlines sort of struggle to try and get operations back and running. And also there's going to be some sort of soul searching in terms of reliance on technology and how they can go from here and increase their resilience as they go forward.
I can't help but wonder if now the conversation, as we start to sort through this, Sid, if it's going to start shaping up to be around cost, what the cost of this is going to be, how expensive it will be for these airlines to try to restructure some of their IT systems. Do they still have that firepower if they want to make big changes?
It's early days, and it's obviously, I mean, you can't really replace your IT providers overnight. And given that these systems are incredibly complex and they're sort of very bespoke, I mean, you'd need a lot of time and sort of effort to get into replacing them. But there will be a big question on who picks up the cost for this outage. And I mean, I'm sure that the airlines are already talking to the IT companies to try and resolve this ASAP and get some sort of clarity on who picks up the tab for this, because imagine the cost is going to be tremendous, especially since you have all these cancelled flights. I mean, we've had over 1,300 or 1,400 flights that are already cancelled today, and the number is just growing. So it's going to be pretty massive.
Sid, do we have a decent understanding of why some airlines have struggled more than others? The likes of United said it's resuming some flights. I've seen something similar from Air France as well. Others are really struggling, and the whole fleet is grounded. At least early this morning it was. Sid, why are we having those greater struggles at other companies versus others?
It depends on how the network and how the IT infrastructure is organized. And so airlines that have a larger presence in terms of their cloud and everything else, with the Microsoft systems on their cloud, I mean, they are more affected in terms of if they have them in the operations and in their dispatch offices. Whereas if you're only relying on a booking system, that's slightly easier and you can manually check in passengers. So it depends on how complex and how involved Microsoft then is in your operations and how the cloud impacts your operations as you go forward.
Sid, great to get your view. Sid Phillip there, out of London on the latest with the airlines. Danny mentioned Dan Ives of Wedbush earlier this morning. I think it's worth going over some of the stock price action. If you look at United, Delta and American, they've had their own problems coming into this particular mess this morning. Those stocks are barely moving on this. CrowdStrike's down by about 10% in the pre-market. I want to go back over that quote that Danny quoted earlier this morning from Dan Ives. Today, CrowdStrike becomes a household name, but not in a good way. This will take time to settle down, but does not change. And this is the key line, Danny, does not change our positive long-term view of CrowdStrike or the cybersecurity sector.
I think it's this idea that they are the incumbent. To try to replace them would be a Herculean task, because Dan Ives does go on to say that it could create opportunities for some sort of competitive displacement. But I think the likelihood, Sid even said it there, you can't turn around overnight for an airline and put in a new IT system. It's just not possible. I'm curious, again, what the cost is going to be, whether CrowdStrike is going to have a real soul searching and come to some of these corporations to make sure that they don't go elsewhere. Again, that's why you see the stock down, but it did bounce back. It was down worse. And I wonder if it is because of this feeling that they can't be displaced, that there really is not too many alternatives.
That stock is slowly recovering. If you are just joining us, I know many of you are, welcome to the programme. I've promised updates throughout this morning, so let's get you another one with your Bloomberg Brief. Here's Yahara Hakez. Hey, Yahara.
Hi, John. Microsoft saying the underlying cause of global tech issues have been fixed. CrowdStrike now saying issues are not related to a hack. Shares of both companies, as you said, are getting hit in the pre-market as tech issues have taken down airlines and many other businesses. Bankers around the world were caught up in the outage. For example, Bloomberg learning from sources that at JP Morgan, some staffers were unable to log onto the firm's systems today, and the bank also told some buy-side clients that it was unable to process certain trades. Netflix, meanwhile, beating analyst expectations, adding 8 million new subscribers in the second quarter. That's nearly more than double what analysts were expecting. It was shows like Bridgerton and The Roast of Tom Brady that helped the streaming giant hold on to 278 million subscribers worldwide. However, the forecast for the third quarter coming in slightly weaker than expected. Shares were lower after the results, but have since recovered. Prosecutors at the Justice Department say they need more time to finalize a plea deal for Boeing in connection to 2 fatal crashes of its flagship airliner. Boeing agreed earlier this month to plead guilty to fraud and pay nearly $500 million in fines in order to avoid a criminal trial. The prosecution says they've made progress toward finishing the deal and could file a final draft next week. Families of the crash victims have filed a notice with the court indicating they plan to object to the deal's terms. That's your Bloomberg Brief. John?
Yahara, thank you. We'll catch up with Yahara in about 30 minutes' time. Up next on the programme, setting you up for a rate cut.
We've had some really good incoming data, but even with the incoming data on inflation being positive and a good data after earlier this year, we're not there yet.
How many times have we heard that this week? We're getting closer. We're not there yet. Closer, but not there yet. That conversation up next. You're watching Bloomberg Surveillance. Live from New York, welcome to the program. Equity futures right now on the S&P 500 look a little something like this. We're positive by almost 0.1%, slowly recovering. Yields are higher by about a basis point, 420.97 on 10s. Under surveillance this morning, setting up for a rate cut.
Had some really good incoming data, but even with the incoming data on inflation being positive and a good data after earlier this year, we're not there yet. We don't have price stability right now, and we need to be very confident that we're on a sustainable path to achieve it.
So here's the latest. More Fed speak ahead with remarks from Williams and Bostic. Fed officials continuing to boost investor confidence that a cut is coming in September. Jerome Schneider at PIMCO saying this: consider moving out of cash. With the prospect of the Fed cutting rates and inflation subsiding, it is time to start thinking about moving cash that has been on the sidelines. Jerome joins us now for more. Jerome, good morning.
Good morning to you.
Nice to have you on the East Coast.
Well,
let's get to that line first. It's time to move out of cash. Why?
Well, simply put, the Federal Reserve has become sufficiently confident to begin this easing process along the way. And although the market is trying to extrapolate at least a series of rate cuts, what we are beginning to see is the rationalization of being in the front end of the yield curve, which has benefited clients for the past 12 to 18 months very rationally, is beginning to be a little bit stale at this point in time. And with the Federal Reserve beginning to move, at least to an easing bias, we're going to see a series of 1 to 2 rate cuts this year and maybe prospectively longer. But focusing on that current income, it's simply going away. So the time to move out of cash, move a little bit out of the yield curve, add a little bit of interest rate exposure is prudent. And I think that right now, given everything that's going on in the world, there are 4 factors that investors really need to focus on at this point in time. Number 1, what's going to happen in short-term interest rates? What's the Federal Reserve going to do and what are the impacts? Number 2, what's the longer-term impact on interest rates? Fiscal policy clearly is going to be a dominant feature in the coming years. Number 3, what is risk appetite? Where does that really come into? We're seeing that in equity markets play out in real time, but really that's focused on growth. And number 4, which is something that really people is not at the top of mind, which is liquidity. And I don't mean excess liquidity just simply in dollars, although that could be a concern, but the liquidity transaction mechanisms. What's going to make cash and liquidity move through the global economy is a factor which will ultimately play into how markets behave over the next 18 to 24 months. Put those factors together, we have a little bit of uncertainty. The Federal Reserve is going to try to ease concerns by bringing rates lower and at the same time incite investors to recalibrate their risk expectations over that medium term.
So let's get into this, and I'll offer maybe a well-known counterpoint to all of this, because I've heard it a million times over the last year or so. Start of the year, everyone said reinvestment risk, get out of cash, get out of cash. Might be some people listening to this that say, Jerome, we're only talking about 25 in September, maybe another move before the end of the year. I've got time. What's the reinvestment risk? What's the message that you're sending back to them?
Well, simply it's a case where current income is a factor where people have become used to earning 5% on their cash. The reality is driving that cash and helping to preserve those returns a little bit longer in the face of a little bit more volatility in the market is really the conversation to have. Let's extrapolate and rationalize that the smooth volatility that we've appreciated over the past 5, 10 years from easy monetary policy may not persist. And as a result, we need to have investors take a moment back, not really get involved in the day-to-day minutia of these rotations in equities or this factor in terms of curves or where we are in interest rates, but take a step back and reset their expectations in terms of where they're thinking their investments are going to be for the next 2, 3, 5 years. And that brings us to the front end of the yield curve, moving out a little bit so you can drive price appreciation as bond yields move lower, at least in the front end. Now, it doesn't mean move entirely out of cash, but what it does mean is that begin to sequence and appreciate the value of at least fixed income at this point in time, given the circumstances of price appreciation in the face of declining interest rates in the front end.
And certainly that'll be impacted by what type of cutting cycle we're going to have. And you mentioned maybe 1 or 2 this year, maybe some next year. You don't sound like what the market is saying right now, which is something like 7 cuts.
Well, I think this is simply a case, quite honestly, where you're going to have the market appreciating day-to-day factors in data. And the Federal Reserve is data dependent, but they're not data dependent on a daily basis. And the reconciliation is at times very difficult for the market simply to digest. So think about it as this. The Federal Reserve is trying to cross a river, but the bridge may not necessarily be there. It might be washed out entirely. The destination is, they think they know what it is, but they don't necessarily have the monetary policy vehicle to exactly stick the landing. But yet, the current market is knowing exactly where that destination is, and they're willing to extrapolate. So it is a question, perhaps you get 2 rate cuts this year. That's sort of more in focus given the bias that we're seeing for the Federal Reserve from daily, from President Williams, from Governor Waller. We're seeing that evolve to be a September meeting type of cut. But is it going to happen throughout the course in a sequential basis in 2025? There's a lot of road to cover. Clearly, the election comes into play, growth impacts come into play. Frankly, if you see inflation still hang above 3%, that also comes into play. So to simply see that we're seeing that yields are pressing back against the lower rate levels that we saw earlier this week and late last week, it is a little bit comforting that there's beginning to be some rationalization in the micro sense of where rates are. But in the longer term, let's understand that we may not necessarily see the sequence of rate cuts materialize to the extent the market is. And that's frankly where active management comes in. And more importantly, try to find ways where you can have structural enhancements where moving out of cash produces returns of not only 5% you can have in money market funds, but 6 to 7% by moving and driving price appreciation by being in bonds.
How receptive are clients to that message? Because it is a very prevailing thought right now that once you get one rate cut, it awakens the animal spirits and everything follows.
Well, admittedly, it's sort of like a little bit like pulling the fire alarm. People typically don't wake up from the money market malaise until 18 months after the first rate cut. That's a long time. And yet they're going to see a series of rate cuts where that current income moves from 5% to something in the 4s likely. Is that enough to wake people up? We are beginning to see those conversations. We are seeing those conversations move to short-term strategies, to fixed income in general. And that's actually a comforting thing because it's a rational response because the fixed income component of portfolios, which has been grossly underappreciated for a decade, some partly rationally, admittedly, because it's a volatility management mechanism at this point in time. Given the uncertainties that are beginning to emerge in the marketplace, we have to be rational about where returns can be on a risk-adjusted basis, whether you're a allocator or whether you're a retail investor. Those two things are really a prudent mechanism to help reduce risk in the day-to-day volatility we're seeing imminent.
What kind of risk mitigation characteristics do you get further out along the curve in, say, treasuries at a time when the nature of the threat could be additional supply from the U.S. government? What does that look like?
Supply, fiscal deficit. These are things at PIMCO that we are continuing to weigh on our conversations in investment committees, in our forum process. And admittedly, it's going to be part of the debate of what we're going to see in Congress and government develop over the coming years. So it's a secular theme that we have to deal with. But does it necessarily mean it's going to happen tomorrow or the bond vigilante is going to come out and reprice along into the yield curve? Unlikely today, but we're going to see it happen over time. But I think what it really rationalizes is that what is the proper term premium? Meaning, what does it take for investors to move out the curve and take on more interest rate risk? And to do that, it has to be something more than the negative term premium that they're getting now. So from PIMCO's perspective, we do believe that results in a curve steepener over the medium term. But it's a long road to get there. It's iterative. And the 4 factors I mentioned at the top is simply something that's going to be very cumbersome to really get to that destination at that point in time.
This was super thoughtful. How closely focused are you and the team on the political developments over the last few weeks?
Oh, it's one of those things that it's a minute to minute, can be there. But as you know, Jonathan, it's a very dynamic situation. And there's a lot of factors that can come into play over the next 4 months, including the candidates themselves. So when you see that, what we do see is that the policy implications, the fiscal policy implications, are probably consistent, at least through the course of 2025. So if you're going to look at that, you can at least see and garner that we're not going to see a significant change in that policy impulse anytime in the near future, given that.
Jerome, this was great. Jerome Schneider there of PIMCO on the latest. Danny, I don't remember a news cycle like this. Maybe the pandemic 4 years ago, 2020. It has been so intense over the last few weeks.
It's unrelenting, and it is a market that doesn't really know what to do with it. We've gone back and forth from rotation to stop rotation to bonds up, down, yield sideways.
Steepener, flattener.
Exactly.
I know. It continues. More still to come. The third hour of Bloomberg Surveillance just around the corner. Bloomberg's Shonali Basak breaking down some of the disruptions to global banks. We'll speak to Daryl Cronk of Wells Fargo, Vishy Thirupatur of Morgan Stanley, and Neil Dutta of Renmac. From New York, this is Bloomberg.
This is the crescendo about a narrow market and bad breath reaches its peak, right? Boom. Massive reversal.
I think it is sustainable, and I think it's what we've all expected to happen.
Until we see the fundamentals change, I'm still not entirely sure that you're going to see the broadening out that a lot of people hope.
The market, I think, is aggressively pricing in for several cuts. That feels like it's a little bit too much.
That's what small caps are really queuing on. It's the fact that you can now be in an interest rate cutting cycle. That's the new chapter that we're in.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. It feels like we'll be stuck in this week for the rest of this year. It's been that intense, that long. From New York City this morning, good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Check out equity futures. Here's the picture for you. Just about unchanged, a positive about 0.1% on the S&P. Similar move on the NASDAQ, on the Russell. Things seem calm, don't they? I'm sure for a few of you who have been up over the last couple of hours, looking at what's happening with airlines, the big tech outage, nothing calm about it. CrowdStrike down by about 11% in the pre-market. Danny, big focus on this one company.
A big focus on this company and its implication across industry, the most visible which is airlines, because many different airlines have said, look, we'll give you vouchers, things are disrupted. A few of them have been able to get back up in the air. American unchanged. I think it's one of them that's been able to have a few flights out. I think there's just this mass confusion because of how pervasive CrowdStrike is and how many different companies it's impacting and kind of the slowness, even as they say we have solutions out there, how it's still taking some time to get things back up and running.
It's not just the airline business either. It's the financial industry too. Danny's been on top of this throughout this morning. Some struggling to log on over at JP Morgan, according to some reports. You talked about transactions. What was it? Norges Bank as well?
Yeah, Norges Bank, their liquidity operations, they've had to do via email and the phone. Going back to basics.
Wow. I think Guy was talking about this earlier, how some of the airlines are writing out boarding passes with pen.
Yeah, but of course, I mean, they have no staff anymore post-COVID, so get your head around that one, how they're getting people through the airports.
Just absolutely amazing. We'll get you an update from Shanali in just a moment on some of this. I want to turn to the price action more broadly. Equities on the S&P just about positive by 0.1%. Yields higher by, let's say, a single basis point. 420.97 is where we are. We had some data yesterday. Jobless claims not fantastic. Federal Reserve's been quite consistent, official after official, saying we're getting closer, we're not there yet. Danny, we're going into the quiet period, I think, with a decent picture of what they think. I know other people have different views on this, but a decent picture of what they think is going to happen in the next few months.
Yeah, the choir is really lining up behind September. None of them are explicitly saying it, but it is notable that the doves are getting louder, that they are a louder force in introducing the idea, as Mary Daly consistently has, of two-sided risk. The question after that will be, if the data has been as lumpy as it is, what happens after September? We got the feeling they're going to go there, but can they keep cutting? And can they keep cutting into 2025?
What happens in November? Never mind what happens in 25. What happens this weekend on that front? This has been amazing. It's just been relentless. That was the word you used, and I think it's the perfect word. Relentless for the President of the United States.
It is.
Gets COVID, has to step away from the campaign, and just as he steps away, the pressure cranks up again. You've got Democratic leadership in both the House and the Senate pushing back. President Obama, according to some reports, telling allies President Biden cannot win. We've seen this on repeat now, day after day for weeks.
The timeline has been quite incredible because after Saturday, after the assassination attempt on Trump, it went quiet. It went quiet, and there was this idea that maybe things are so chaotic and so much momentum is building behind Trump that everybody just needs to rally behind Biden. That was extremely short-lived. And as we've been saying, every single day, the dam is breaking. When does it break? What does it take him for Biden to actually bow out? Or do we just live like this? Do we just live with a divided party? I don't see how that can happen when the down-ballot races are seriously under threat.
You've seen the reports swirling once again that it's like this weekend is decision time. Make the decision, and the campaign keeps turning around and saying, we've made one. What are you talking about? We've made the decision.
Yeah, that's why I find Nancy Pelosi's language really interesting. The reporting is that she's pressuring Biden to make a decision. Even when she talked publicly, that's the language she used. By all accounts, they've made the decision, and it's for him to stay in. But if they change their mind, what does that even look like for a President Biden to bow out of the race? What does that even look like to have a new candidate? What does it look like when we know it is a very fractured party at this moment?
And listen to this. We're having a political conversation. We're not talking about the content, the substance of what we heard from the former President Donald Trump in his address to this country, not just the Republican Party, yesterday evening. Anne-Marie was at that convention. She was in the room. We'll catch up with her in about 40 minutes' time. Coming up this hour, we'll also catch up with Darryl Cronk of Wells Fargo as investors game out Trump 2.0. Mandeep Singh of Bloomberg Intelligence as a worldwide tech outage disrupts business worldwide. And Neil Dutta of Renmac on why the Fed must cut rates at the end of this month. We begin with our top story. Global tech outages linked to Microsoft and CrowdStrike causing widespread business disruptions, including at the big banks. Bloomberg's Sonali Basak has more. Hey, Sonali.
Good morning, John. The first thing I thought when I woke up this morning was, could you imagine if this were to happen during the COVID times? How much activity has moved online for the banks and how much they have invested in cloud infrastructure, public and private, but many of those banks relying now on the private cloud infrastructure seeing these outages. How is it playing out? At JP Morgan, for example, some staffers were unable to log on. At hedge funds, they have not been able to process certain trades across many funds, across the world, by the way. At different banks, think Hong Kong, South Africa, Singapore, you have seen issues both with trading desks as well as employees able to log on. Some people had to go home in Hong Kong, certainly in London as well. I would also mention one big deal as well. The LSE Group, which is the parent of the London Stock Exchange, reported issues with preventing news from getting published. The RNS news service, very important here, 350,000 announcements a year, 75% of all price-sensitive news. Think deal making. If you were announcing a deal this morning, this would have been a massive problem for you. And then not to mention the commute issues. If you're just trying to get to work in London, in Hong Kong, or in New York, of course, the systems are all online, but getting information about them might be difficult. If you were off on a business trip, forget about it. If you were not flying private, for example, you might be stuck in an airport right now.
Well, presumably a lot of those banking executives are able to do that, Sonali, but not to pick on them because there hasn't been any reporting on Citi having issues. But just to take them as an example, Citi has been hit in the past with issues integrating some of their old and some of their new IT systems together. Considering we've had issues like that in the past, is it a problem that some of these large financial institutions, which regulators look at really closely, have as simple of problems as not being able to log on in the morning?
And that's kind of why I was saying, imagine this happening at a time where people couldn't go into work, right? Because there needs to be an online solution. And to the point that you're making, a lot of the problems that Citigroup had were legacy financial systems. They were legacy technology issues, Danny. This is the new way of doing business. And there have been a lot of warnings about what it would mean if there were, and by the way, CrowdStrike had said this is not a cyber attack. That's the good news here. It wasn't an attack on these banks or these financial institutions directly or their balance sheets, their consumer funds. But the issue here is the normal way of doing business, moving money around the world. To your point, to mention Citigroup, very smart because they move more money around the world than anybody else. And so if you're trying to make a simple transaction, what happens if your bank can't make that happen for you and they're connected to Microsoft? We don't know exactly which bank is working with Microsoft on what issues and what issues at Microsoft are impacting which banks at this moment. We are still looking to find that out in contact with all the banks. But to the point here, they're more connected. They have invested very heavily in cloud, and this is one way that things could go wrong.
Sonali, thanks for the update. Looking forward to the coverage a little bit later this morning as they count you down to the opening bell starting at about 9 a.m. Eastern Time. Sonali Basak, Matt Miller and Katie Greifeld will be doing that for you in just a moment, about an hour away. Let's turn to politics, pricing in a second Trump term. Darryl Cronk of Wells Fargo saying this: as the odds of a Trump presidency increase, so do the chances of Republicans keeping the House and winning the Senate. Sectors that are likely to be perceived as winners under a Trump White House, Republican Congress are defense, financial services, REITs, and traditional energy. Darryl joins us for more. Darryl, good morning. It's good to see you.
Good morning, John.
Let's start with the energy piece of this. Perception versus reality. When the former president comes out and tells the whole room, drill, baby, drill, should I be buying energy or running away from it?
Well, it's interesting. It's a great point because during the past Trump presidency, energy was one of the worst performing sectors, right, from a GIC standpoint. Ironically, during the Biden administration, if you mark it as of the date of Joe Biden's election 4 years ago, energy's been one of the best performing sectors. So there is a little bit of a contrarian element there. In fact, it's rivaled tech. Most people don't believe this, but you can go back and run the numbers that everybody believes tech has been, consumed all the oxygen in the room. And the reality is energy has done extraordinarily well in the last 4 years since the last election. All that said, I actually do believe that we're probably in a secular bull for energy. It's our single biggest and best idea of high conviction on the board. And it's not a conviction that we think, fades in the next 3, 6, 9 months. We think it's a multi-year, the world just has too much demand coming out of AI, cybersecurity, defense spending, right? I can go down the list of inputs coming into the demand side of energy, and we just don't have enough supply. That's just the hard reality of it.
We should also say it's the odd reality of American politics that you can come out and say drill, baby, drill, and there are very few progressive Democrats that are willing to come out and correct it, because the reality for them is that actually we've got record output near 13 million barrels a day. It's an odd situation, isn't it? They almost don't want to talk about it, that we've actually got record output in America when it comes to crude.
Right, and it is a sector that also has done very well under President Biden, which also gets to this idea of how much do you really want to trade the politics when they both have had the same net result?
We've been trading the politics, the small caps as well. You've got rates, you've got earnings, and then you've got Donald Trump. Out of those three right now, and I know this is difficult to do, but just based on your conversations, what you see in the price, the rally that we've had over the last week in small caps, is it about one versus the other, or three combined? What is it?
So we've had a lot of conversations at strategy committee about this, right? Because it's a rip your face off rally over the last 7 to 8 trading days. And it started with the weak inflation. Then everybody believed the Fed was, a go in September, no ifs, ands, buts. And so here comes the rate cutting cycle. And then, of course, the events over the weekend of the attempted assassination put a bid in a Trump presidency in a red wave, basically. So it's those three combined. I would tell you this, John, we're thinking about, is it a reaction or is it a rotation? Because they're two different things, right? Reaction is a short-term reaction in the last 7, 8 trading days, right, that blows through some of the technical resistance levels and everything else. Or is it a true rotation where capital is believing that small caps can durably outperform over the next, 6, 8, 9, 12 months? We think it's the former. We think it's a reaction at this point. If you look at small caps, still 40% are non-earners, as everybody knows. What's interesting is if you look at the equity risk premium, right, which is just a function of, am I getting paid to take the risk? It's at an all-time low on smalls. All-time low, right? Not like a cycle low or anything else. It's an all-time low today, right? So you're not getting paid to take the risk. The leverage is still high, as we know, in small caps. So as they have to service that debt, right, that's hard on their earnings. And the earnings, both today and going forward, are still expected to decelerate relative to large, right? So the fundamental story is not there. Now what can change that? What will change that is if the Fed cuts rates faster and more than people expect, because small caps are highly indexed to floating rate debt. Almost 40-45% of their debt is floating rate. So if you bring the short side of the curve down quickly, that's a big tailwind, right, to small caps, along with they're highly leveraged. So obviously as rates come down, it helps them in their business model, margins, earnings, and the like. Today, bottom line, we still think it's a reaction and not a full rotation.
What about the rest of this market? Because it's not just small caps that did better. It was basically everything but big tech. Big tech just kind of stayed flat. Is that more enduring, that you have a market that is maybe gone over its skis with how concentrated it is and willing to look elsewhere?
I think it's a great point, Danny. So, we are at a little bit of tenuous levels this morning, right? The S&P is sitting right on top of its 20-day support level. But big tech, more importantly, right, Mag 7, top 10 names, sitting on top of its 50-day. If it pierces its 50-day support level, right, I think some of that selling accelerates to the downside. We all know breadth has been far too narrow, right? And that leadership needs to expand. So I would argue and postulate that if you can get leadership to expand, right, into financials, into industrials, right, into other areas of the market, that's actually a healthy thing for markets, right? We know we've had too little leadership that's been too concentrated, that on a market cap basis has driven that. So it's a healthy thing if we can do that, but the question is if, because just a week ago before we started this rally, the index was setting all-time highs, and the number of participants above their 200-day moving average were at all-time lows in the S&P, right? So
here's the thing I worry about, that people are piling into cyclicals just as the cycle's starting to turn the wrong way. Isn't that what you worry about too?
It is. I mean, if I was asked this question the other day, what would make you buy small caps, right? Which is a prime beta cyclical. It would be one of two things, right? Either it has to be price compelling, which to me, the Russell 2000 probably needs to be at 1850, 1900 before you're price compelling, or I have to believe I'm early cycle and not late cycle. And all the data tells me that I'm still late cycle, right? If you can convince me I'm early cycle, I'm a buyer of small caps all day.
Because I've been asking this question for months, if not years now. Do you really want to buy the recovery to the recession we haven't had?
That's right. Unless there's compelling evidence there, right, that we're truly that. I guess you can make the case. Here's the contrarian case. You make the case we soft land, so you never have the recession. You trough out a little bit, and then you really re-accelerate hard to the other side, of which then small caps make sense. I'm a little worried that people are jumping on small caps because remember, small caps did well as we closed 16 and early into 2017 on the first Trump presidency, right? So they're replaying the same tape, right, if you will. Bear steepener, small caps outperform, defense, financials, REITs.
Banks have ripped.
The whole thing is the same playbook. If that same playbook doesn't play out in policy, right, in what, let's say, Trump 2.0 comes to fruition, if that's how the November election goes, then you've got some risk in those trades, and they become then the reaction and not a durable rotation.
As we start out this conversation, Daryl, a huge part of it is what down ballot races look like, what the House and what the Senate look like. Does just the fact of Biden being more likely to drop out with this pressure make that up in play and maybe question some of this rotation?
Yes and no. So our thought all the way along is the Senate, clearly the math is difficult for the Democrats to hold the Senate, right? And everybody knows that. So it's likely to go GOP. We've often thought the House goes the way of the executive branch, right? So whoever wins the presidency carries the House on their coattails. Right now you have to think that the strength has been towards the President Trump and weakness towards Biden, at least in the intensity of voters and what they want to see. The Democratic Party seems to be united around one thing, which is trying to move to a different candidate at this point. If and when they do that, the question then becomes, can they unify from there, or does that fracture the party?
Oh, it's been a massive distraction. The focus overwhelmingly winning in November and not governing for the next 4.5 years.
That's right. And policy.
Let's talk about policy. Let's talk about policy a little bit more. Darryl, it's good to see you.
Thanks,
Darryl
John.
Crunk there of Wells Fargo. Thank you, sir. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. Microsoft now saying the underlying cause of the global tech issues have been fixed, while CrowdStrike has come out and said the issues stemming from the cybersecurity firm are not related to a hack. Shares of both companies getting hit in the pre-market as the tech issues have taken down airlines and many other businesses. But Delta Airlines, which had grounded flights over the tech issues, just now saying it has resumed some flight departures. And as we get ready for the opening here on Wall Street, the Nasdaq saying it expects all of its U.S. markets to open normally and that there's no impact to its exchange systems. A Russian court has convicted Wall Street Journal reporter Evan Gershkovich with espionage and sentenced him to 16 years in prison, according to state media. The closed-door hearing had been moved up almost a month from its original date. The 32-year-old American was accused of spying for the CIA when he was detained in March of last year. And pressure is continuing to mount on President Joe Biden to step down from the race from within the Democratic Party. Former President Barack Obama becoming the latest voice in the president's ear to urge him to reconsider, according to a report in the Washington Post. That report following similar sentiments from other top Democratic lawmakers, including Nancy Pelosi, Chuck Schumer, Hakeem Jeffries, and Adam Schiff. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara again in about 30 minutes' time. Up next on the programme, the Morning Calls Plus. Mandeep Singh of Bloomberg Intelligence as CrowdStrike works to contain a global tech outage. That conversation up next from New York. Good morning. Counting you down to the opening bell, about 1 hour and 10 minutes away. Equity futures on the S&P 500 just about unchanged. Let's get you some morning calls with just one stock in focus. It's Netflix. First up, Wells Fargo raising its price target up to $7.58. The analysts still expecting consistent growth despite slowing subscriber numbers. Next up, Evercore raising its Netflix price target up to $7.10. The analyst highlighting the company's impressive subscriber growth numbers completely, against estimates, blowing it out of the park, knocking it out of the park, just phenomenal. And then the guidance was a bit softer, and here we are, up just 0.9% on Netflix in the pre-market. Your final call from UBS, raising its price target to $7.50. The analyst noting that Netflix is still a direct-to-consumer giant. It's difficult to argue with that. Let's turn back to our top story. Widespread tech outages disrupting businesses around the world. The CEO of CrowdStrike saying the issue has been identified and a fix has been deployed. Dan Ives of Wedbush weighing in on the market implications, writing this. Today, CrowdStrike becomes a household name, but not in a good way. This will take some time to settle down, but doesn't change our positive long-term view of CrowdStrike or the cybersecurity sector. Let's continue the conversation. With us around the table is Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning to you. Not the morning you expected, I'm sure. What do you think happened here?
Well, they shipped out an update to their software, CrowdStrike did last night. And so it affected the Asian companies first. And what we learned was it was nothing malicious, regular update, but an update that affected Microsoft operating system functionality. And that's where, whether it's an agent-based security solution or an agentless security solution, that comes into picture because, if something is changing operating system functionality, you have to ask yourself, why didn't Microsoft pick that? Even though, there was no malicious intent, it was just a bug. I mean, codes have bugs, but why wasn't the bug caught when it was being tested and, when it was shipped to impact Microsoft in such a big way? And that's what I think everyone is trying to figure out is how did this get shipped when we test every change that we make to our software, 100 times? And clearly that didn't happen in this case.
Well, it wasn't caught at first, but CrowdStrike does say now that they've isolated the issue. They've issued out a fix for it. But can we get a sense of just how long it takes to actually repair some of the damage for IT systems specifically to get them back up and running? Is this like you issue a fix and people can all of a sudden log on again?
Yeah, so one is you bring the systems back online, but there were a lot of missed transactions. And in certain cases, you have to do some rollback. So your backup solutions come into play. And that's where, there are certain businesses, certain companies that are actually benefiting right now because any company that provides a backup would be in business today. So clearly, the longer term question for Microsoft is because they're deploying everything to their Azure cloud and this affected just Windows, you have to ask yourself, there could be other vulnerabilities at the operating system level that could bring the whole system down. And that's where the critical system updates are so crucial. If it was data loss, which we hear about, with Snowflake and with other incidents, people move on because, it was a one-off thing. Companies fix it. But if it's a complete system-wide outage, that's a completely different ballgame.
There is a sense on the south side we do just move on. Dan Ives of Wedbush saying it doesn't change things for him, at least over the long term, still positive on this company, on the cybersecurity sector. Are you taking a different view then?
I'm saying that agentless solutions, and that's where the Google's, rumored acquisition of Wiz Security comes into play. Google, a cloud player looking to buy a cybersecurity vendor. What's so special about Wiz? Wiz is an agentless solution. Again, that's where companies will try to figure out what is it that brings the whole system down, as opposed to, okay, the system didn't catch a cyber threat, but at least, your critical systems will keep running. So I think this will bring a lot of questions. Yes, companies have a tendency to move on, when it comes to breaches and those sort of things that has happened in the past. But this is a more architectural question. And I do think CrowdStrike will miss their 2Q numbers, the quarter they'll report, the July ending quarter. They clearly, this incident will have an impact. And down the line, it just comes down to how they handle this outage.
Mandeep, thank you, sir, for the update. Mandeep Singh there of Bloomberg Intelligence on this global tech outage that we're still trying to sort of recover from across several industries this morning going into the weekend.
Yeah, because even if you fix the IT issue, there's still the follow-on effects from that of airports, of lines, of things misplaced that you need to get together. And I am interested to hear whether we start to have that conversation of who are CrowdStrike's competitors.
Logistical nightmare. And on the antitrust front, it's a good point. It's a very good point. Coming up on the programme, Morgan Stanley's Vishy Tirupattur, Neil Dutta of Renmark. As we go into the quiet period for the Fed, there will be nothing quiet about this conversation. Up next from New York, this is Bloomberg. 60 minutes away from the opening bow with equity futures just about unchanged on the S&P 500, down on the week Looking at the worst week since April, potentially, for the benchmark stateside. The benchmark for us, really, over the last couple of weeks has been a Russell. It's the only thing anyone's looking at. The small caps have absolutely ripped, but they've not been spared over the last few days. Pulling back, we're down another 1/10% on the Russell 2000. If we switch up the board and get to the bond market, 2-year, 10-year, 30-year, the 2-year approaching 450 again at 449.18, which is curious, given jobless claims started to climb higher again in yesterday's session, which is difficult to get your head around.
It is difficult to get your head around. The only thing you could really point to is just this is a market that's already priced in what the Fed is saying. They're already pricing in September at one point 100%, and nothing is a sure thing. So maybe we just need to back off. We just got too sure of ourselves.
We're going to back off now. We're going to talk about something else in a moment. Let's get to foreign exchange. The euro 108.90. Just about unchanged to negative 1/10%. I think the headline of the week in foreign exchange actually came from Donald Trump in an interview with Bloomberg Business Week when he said, "We've got a currency problem," which was quite the headline. And the dollar on the week, guess what it's done? It's basically unchanged on the week.
Yeah.
In the face of those comments.
Well, that's because you have the push and the pull. The pull of that comment saying that we have a currency problem, we want a weaker dollar, and then the push of it being that we want tariff policy, we want to raise the deficit, things like that, that would ultimately have an impact of strengthening the dollar. So as a trader, you got to say, what's more important, the job owning or the policy? And oh, by the way, we also still don't know who the Democrat candidate is going to be. So it's a really difficult thing to absorb, and maybe you just need to go back to what's safe and what's comfortable, and that's the Fed.
In just a moment, we talk about the Fed and all of the above and why one individual thinks they should get a move on and start cutting, like right now, in the month of July. Let's get you some top stories. Under surveillance this morning, widespread outages disrupting service for companies across the globe. The CrowdStrike CEO saying the outage is not a cyber attack. Microsoft saying the underlying problem has been fixed. CrowdStrike is still lower in early trading by 12.7%. Elsewhere, President Biden facing perhaps the most consequential weekend of his 5-decade political career. A person familiar with the matter telling Bloomberg some members of his own cabinet discuss whether his re-election campaign has reached breaking point. That doesn't surprise me. The leaks continue, Danny, from the cabinet members to Democratic leadership to even the former President Barack Obama himself.
And some of the reporting, specifically from the New York Times, suggests that Biden is becoming more receptive to this. He is starting to become receptive to the idea that maybe he does need to bow out. If that's the case, what happens from here? Because you could say, okay, the whole party needs to get together. They all need to hold hands and jump. And that means with someone like Kamala Harris. But then you get back to the criticisms of the initial primary, that it's been undemocratic, that you didn't really have a fair competitor to Biden. So what happens when that's the same argument for Kamala Harris? But then if you do the other thing and you have a real primary, it might just underscore an already fractured party.
I said at the start of this hour that it feels like this week is never going to end. You know, based on this political conversation going into this weekend, it really feels like this week is never going to end. The good news is that the weekend's for the Federal Reserve. Today is the last day before the quiet period ahead of that meeting on July 31st. We will hear from Williams and Bostic with investors across the planet gearing up for bets that we get a September rate cut. With us to discuss, Vishy Tirupattur of Morgan Stanley alongside Neil Dutta of Runmac. Neil, let's get straight to you, sir. The case for July, not September. How strong is the case to cut rates this month?
I think it's quite strong. I mean, the data are basically right there. You know, the Fed keeps talking about how uncertain everything is, but if you're so uncertain about everything, you might as well revert back to standard kind of monetary policy rules. Just put everything into a computer and see what it spits out. And I think across nearly any monetary policy rule that people look at, it basically suggests that it's time now to move to a less restrictive policy stance. You know, ultimately, there's no inflationary impulse from the labor market. I think that's been true for quite some time. The Fed is now recognizing that to be the case. And I think importantly, core inflation continues to moderate. It's probably going to be 2.5% by the end of the summer, if not lower. And, put it into a Taylor rule, see what comes out. It doesn't come out 5.5%, I'll tell you that. So, remember, John, the Fed's not going to be cutting unless they at least see a path to several cuts, because what's the point of going just once? So I think what's going to happen is they'll use July to set up the September cut. I do think that there's sort of a sort of institutional bias, you could say, for them to just rip the Band-Aid off and go, even though I think it makes sense to do so. But I do think that, essentially there's not much difference, right? I mean, if you're going to cut in September and you just use July to set up the September cut. That's not really a huge cost to the economy in any meaningful sense. So I think, they'll use the July meeting to make more of a admission that inflation has improved. Remember, in the first paragraph, they talk about how inflation is still elevated. They talk about how there's only been modest improvement in inflation. I think you'll see somewhat stronger language at the July meeting, and that'll be an important signal to market participants that cuts are on the way.
What kind of signal will that give you, Vishy? If they don't cut in July, maybe the case is there, to Neil's point, but all they use July is for setting up September. What difference does a couple months make to you?
I agree with Neil. I don't think the couple of months will make much difference. It's my seat, I'll look at what they would do than what they should be doing. And I think, they are being, communicating that they need one more data point and absorbing all the Fed speak. I think they'll use the July meeting. There'll be clear indication coming out in terms of the language changes along the lines of what Neil was saying. And that would suggest September cut. And, the market is very much pricing that already, well over 95% probability of a cut.
This makes a lot of sense, and I don't think anyone listening to this conversation, not many anyway, will disagree with either of you. But here's the question I've got, Neil, and it's inspired by a conversation that we had with Mohamed Al-Erin a few weeks ago. He agrees with you. He thinks the Federal Reserve should be reducing interest rates this month. Where he sounds concerned is that he thinks this Federal Reserve is so hypersensitive to every single data point. There is a risk that between now and September, you just get one bad CPI print and it spooks them. Do you share that view? Do you share that concern, that risk?
Sure, John. I mean, as a former believer in a March rate cut, I'm definitely sympathetic to the idea that the Fed is too much of a slave to the high-frequency data. I mean, if you're going to be data dependent, I think, I believe it was ECB President Lagarde that, basically made the point that data dependence doesn't mean data point dependence. And I think that's important because you need to have a way of thinking about the economy. How is the data evolving? And, ultimately, what's the right tail for growth and inflation right now? It's really hard to come up with it. So, data points ebb and they flow. I mean, if you look at the high frequency data, frankly, out of the U.S. so far this week, it's been a bit of a hodgepodge, right? I mean, we had weak auto sales, but retail sales were stronger. There might be some seasonality with that. Industrial production was stronger, even though manufacturing employment fell. We've had mixed survey data out of the regional manufacturing indicator. So it's been a bit of a mess, but let's think about the overall picture. As I say, what's the right tail for the economy? I mean, there's no evidence that growth is getting away from the Fed. There's no evidence that, are we going to see a big upturn in shelter prices? Are we going to see, a big upturn in non-housing services with the labor markets cooling off, with unit labor costs running below 1%? So, I share that kind of, I think that is a valid critique. I mean, you can't just be a slave to the high frequency data. You have to kind of think about things using sort of a big picture point of view. And as I've been, one of the points I've been making is that unit labor costs are very low. I mean, they're running below 1%. So with the Fed that kind of has a very labor market driven view of the world, where is the inflation coming from? There's no evidence that inflation expectations are getting out of control. The dollar's not collapsing. So I think you have to kind of stick with first principles and not just be a slave to the high frequency data.
I wonder if they watched the speech of the RNC yesterday evening, Neil. And I say that sort of jokingly, but I do wonder, Vishy, do you think November could change things? Do you think it could change developments, those kind of considerations?
I think November could change things, but I think maybe not in the most obvious way that people have been thinking in terms of, the first thing that's on top of most people's minds is tariffs. And that's something that you don't need the Congress to put on. The presidential authority can put on tariffs. And I think much of the discussion on tariffs that I've seen is that tariffs are inflationary. Maybe. It's not so straightforward. I think there is we look to the 2018 experience, while the 2018 tariffs did eventually lead to higher prices in the sectors that were particularly tariffed, there's also a significant growth impact, growth and employment impact. So the sectors that were particularly tariffed in 2018 first showed up in their contraction in manufacturing output for those sectors. Employment fell in those sectors more quickly than inflation began to show up. So I'm more concerned that obviously everything depends on details and the expanse or the extent of the tariffs, but I think we should not forget that tariffs could also have very significant downside effects on growth and employment, and those things may precede the effect showing up on inflation. So a lot depends on the details.
Vishy, does that mean we could have a world where there are tariffs and the net impact of it is that we buy bonds, that bonds rally?
I could construct a scenario where we see a significant growth negative impact, and that really depends on how broadly these tariffs would be. So in the past, we could have said that tariffs on, say, one particular country, then you could resource that material, those products from somewhere else. But it's across the board, across all products, across many, many countries, that potential is also lower. So that really results in cost of manufacturing of those things going up. And the ability to pass that on may be limited. And that could show up in employment, effects on employment and manufacturing output. It's not clear. It really depends on the details.
It depends on the details, and until then, as you say, you can kind of construct a scenario for everything. So Neil, how should we be thinking about this when we don't have the details yet, and maybe we'll start to get them after November? Should it be impacting the Fed's thinking, or should they just be a straight, narrow down, blinders on, not really looking at the politics?
Well, I think it's not that you keep your blinders on, but you have to respond to the world as it is, not necessarily the world that you think may unfold. And the point that I've been stressing is that it's not even so much about the outlook anymore. It's just about the evolution of the data up to this point. Unemployment is up. Core inflation is down. Policy hasn't changed. We know that inflation is a lagging indicator. Whatever inflation is today, that represents yesterday's monetary policy. So I think it stands to reason that policy is restrictive. And if policy is restrictive, that means the Fed should be much more concerned with potential downside surprises to growth than upside surprises to inflation. That's why they should be recalibrating policy, not they shouldn't be playing these sort of prediction probability games around what if Trump wins? What if you have a Democratic Senate and a Republican White House? I mean, the Fed shouldn't be getting into that business. Take the fiscal stuff as it comes to you. I mean, you can to the point. I mean, let's say we have tariffs. I mean, you could easily see a significant devaluation in foreign currencies against the dollar, and then that would send the dollar to the moon. Then what? I mean, so it's I think it's pointless to get into these games without more information and what they'll actually do. But I think the more important point is look at what's already happened. That's enough of a reason to cut, and I think the markets are understanding that.
Vishy?
I totally agree with that. I think for the next 6 months or so, the coast is pretty clear. That the trajectory of inflation and growth to us are very clear, especially shelter. I think shelter inflation has been sticky, and we think that there is enough of information that is in the system now that we will see slowing of shelter inflation component. And what we are talking about, what you were asking me earlier, all of those things are really a 2025 phenomena. And certainly, over the trajectory for the next 6 months is very much that of decelerating growth, decelerating inflation, making steady progress towards getting pretty close to the 2% target. And there is, do we need the amount of restriction in the economy in the face of that? The answer, very straightforward answer, is no, we don't, and therefore there need to be cuts.
I have to say, Vishy, you sound like a bond bull. Is that fair?
It's fair. We would expect to see. We would, I think, if all of this plays out, at least for the near term, we would expect to see duration rally from here.
Vishy, it's good to see you. Thank you, sir. Vishy Tripatur there of Morgan Stanley. Neil, Always great to hear from you, sir. Neil Dutta there of Renmac on the latest. Thank you very much. Going into the opening bout, that's about 46 minutes away. Equities are doing OK, just about unchanged on the S&P. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers.
Hi, John. The New York Stock Exchange says it expects a normal opening bell in less than an hour as widespread outages disrupt services for companies around the world. But companies are starting to come online. For example, Delta Airlines saying it has resumed some flight departures. Microsoft saying the underlying issues have been fixed, while CrowdStrike has said the issues stemming from a tech update from the firm are not related to a hack. American Express lower in the pre-market after saying it's planning to boost spending on marketing after a measure of customer spending on the company's credit card slowed in the second quarter. The company expecting marketing expenses to jump 15% after billings growth came in below estimates. And in a newly released interview with Bloomberg, Mark Zuckerberg praising former President Donald Trump's reaction to being shot at, but the Meta CEO stopping short of endorsing the GOP nominee.
I've done some stuff personally in the past. I'm not planning on doing that this time. And that includes, not endorsing either of the candidates. Now, look, there's obviously a lot of crazy stuff going on in the world. The historic events over over the weekend. And, on a personal note, it's, seeing Donald Trump get up after getting shot in the face and pump his fist in the air with the American flag is one of the most badass things I've ever seen in my life. But look, it's, and I think, look, at some level as an American, it's like hard to not get kind of emotional about that spirit and that fight. And I think that's why a lot of people like the guy.
Meta CEO Mark Zuckerberg on the circuit with Emily Chang on July 23rd at 6:30 p.m. New York time on Bloomberg Television, or stream it on Bloomberg Originals starting at 8:30 p.m. Eastern. That's your Bloomberg Brief. John?
Yahara, thank you. And thanks for this morning. Have a great weekend. That right there is must-watch TV in the next week or so. Up next on the programme, setting you up for the day ahead and a week ahead as well. In just a moment, we'll get a final word from Anne-Marie on the other side. From New York, this is Bloomberg. The opening bell about 41 minutes away. Equity futures positive by 0.1% on the S&P 500. Here's the trading diary through the rest of today, into the weekend, out the other side and into next week. This is what it looks like. Fed speak from Williams and Bostic throughout today. On Tuesday, we get Alphabet and Tesla reporting results. Wednesday, more earnings from Ford and IBM. Plus, we'll get US PMIs. Thursday, another round of jobless claims. And rounding out the week, we'll get UMich sentiment survey, personal income data and spending data as well. And before we get to all of that, we need to talk about what we can expect this weekend. So let's head out to Milwaukee, Wisconsin and catch up with Bloomberg's Anne-Marie. AMH, let's talk about this weekend. What are we expecting now? Let's park the Republicans and Donald Trump. What are we looking for from the Democrats?
Well, it's definitely a consequential weekend for the Democratic Party, especially President Joe Biden. The pressure is mounting on him from the most prominent members of his own party, Nancy Pelosi, Chuck Schumer, President Obama, in a Washington Post report talking about the fact that he thinks the chances of Biden beating Trump are starting to dwindle. So Joe Biden is going to have to make a very tough decision right now. What we are hearing from the campaign, what we're hearing from the White House, is that he is firmly in this race. But Jonathan, the New York Times says he's begun to accept the idea that he may not be able to win in November and may have to drop out of the race. And our own reporting is that the cabinet is discussing whether close aides should convince him to step aside. Obviously, a big question. We had CBS polling yesterday show this. Even if Kamala Harris is top of the ticket, that polling shows that Trump does better. So if Biden steps aside, of course, the question is going to be, what does this mean for the ticket? Does Kamala Harris take the top of the ticket? Does she go pick a VP? Or do they have maybe a potential mini primary? Is there going to be an open convention in August? And the split screen could not be stark enough. Even if you thought former President Donald Trump rambled last night, which he did after he talked about that attempt on his life over the weekend, which was very emotional. And even if you think he was a bit more subdued and less energetic, the room was electric. This is his base. But as Frank Lund says, this is Joe Biden losing right now. if potentially there is a new Democratic nominee, can that person unite and excite those potential independent voters, those people in the middle that both these parties are trying to get their vote in November?
Let's just back up. Before we talk about a new nominee, before we even talk about the process, what we could see at the Democratic convention at the end of August, let's just talk about where we've been in the last week. Going into last weekend, we said the clock was ticking, that the pressure was building on President Biden. Then the tragic events of Saturday evening happened. We woke up Monday morning. It hasn't even been a week yet, and we were saying that the clock has run out. The president's going to stay in. People were saying they can't put extra pressure on him because of what's happened in the last couple of days. Anne-Marie, here we are. Pressure's back up. They're saying the clock's ticking, and it's all about this weekend. Can you help me understand what is the firm deadline, the cutoff, to put this story to bed one way or the other?
I don't really think anyone really knows what the firm deadline is, because you have members of the Democratic Party that want to bring up the roll call, the official nomination they can do virtually to early August. So I guess we can say around the beginning of August, but depending until we know that firm date of when that roll call is going to be, we don't really know. We're really in a gray, uncharted territory, but it's the middle of July. So I would say before August, they need to know what they're doing going into this convention, because the Republicans were trying to paint a picture, even though there's a lot of division within the Republican Party. They were trying during this RNC, which was run very well, to paint this picture that they are united. Very different than what you're seeing in the Democratic Party. Biden is isolated politically, physically in Delaware, and they are in disarray. You have leaks coming out in the press. They are not getting behind their party leader. But I would say this weekend is critical. I think Biden understands that. But potentially this can last a few more weeks. There's also a chance he just says, like Terry Haynes says, he gives his party the middle finger and says, I have the delegates. He firmly believes he is the person to beat Donald Trump, and he stays at the top of the ticket.
Anne-Marie, he's given himself a few outs, though. Most recently, it was health-related. Before that, it was about him not being the person that could beat Donald Trump. You just mentioned some of the polls showing that Kamala Harris would be no better in a matchup versus Trump. What about the down-ballot polling? What difference does it make having Biden versus a replacement?
Well, this is why you see Hakeem Jeffries and Chuck Schumer trying to persuade him to potentially give his standing in the race another look. They're concerned that they are going to lose their seats. House members, senators, we heard from Senator Tester yesterday. They are concerned that they are going to lose their seats, and he is in a very tough race. And that is why the pressure is mounting. I think there's three key things that we saw. It's the polling, it's the maps about where they're going to potentially lose some of these key races, and of course, it's the donors. There is a lot of reporting that the donor class is saying, we don't want to throw any more money behind this race. And you're going to need a lot of money going into November. And if that starts to dry up, this is going to be incredibly difficult for the Democratic Party.
Anne-Marie, thanks for the hard work this week. Appreciate it. We'll see you on Monday. Might see you over the weekend, depending on what happens. Who knows? More updates for you on this global tech outage, this time from UPS. Just another example of how many companies and industries this has hit. This from UPS just moments ago, issuing a service alert on the website. There is a potential for delivery delays due to the global tech outage. They say contingency plans are in place. There's another one.
Another one, it's a lot of industries, a lot of issues, everyone using CrowdStrike, and it just speaks to the vulnerability of this moment right now, the vulnerability of so many companies which are reliant on CrowdStrike itself. Is this a time for governments to look at that concentration risk, to look at, sure, this wasn't a cyber attack, but what if it was a cyber attack? Just how vulnerable are we?
I imagine there will be DC officials and officials across the planet asking that question and might have something to say later in the day. CrowdStrike right now is negative by 13% in the pre-market, going into the opening bell about 35 minutes away. Coming up on Monday, once we finally get to Monday, Laurie Calvasina of RBC will be joining us alongside Wei Li of BlackRock, Terry Wiseman of Macquarie and Dana Peterson of the Conference Board. To all of you tuning in, you have a wonderful weekend. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance. We'll see you in the next couple of days.